What is up, everybody? Welcome back to Zeus Weekly. We are covering Q1 2026 Zeta earnings live. We got a whole panel. We got Sam, we got Nick, we got Davis, we have Aria joining us later, and we have Nate as well joining us later. So we are going to have a full squad, Z-Vengers as we call ourselves, covering earnings, talking pre-show, pre-earnings, talking about everybody's expectations, what we think is going to happen, then either being right or wrong after they report, getting a reaction of what just happened with Zeta earnings, and then we will be all mainly shutting up to listen to David and company and their team talk live about earnings and forecast, and then we will cover again after the earnings call concludes. We will cover what is going on. So welcome in, buckle up. It's about to be a long episode, but if you were a Zeta Bull, you were in the right place. And yeah, I have a bunch of amazing analysts and retail analysts and great people covering this stock with me. And how are you guys doing today?
We're doing great. I'm excited. I'm happy to be here with everybody again. It's been what? It actually hasn't been 3 months. I think their last earnings was a little late in the game, but this seems to be right on cue with the rest of the cohort, all the other big tech companies. How you doing, Sam? Davis? What's up?
Can I just be honest? All of you people out there buying Zeta today, just stop, please. I do not like this pump into the earnings. Like I hate it when stocks pump into earnings because it gives you like a bad taste in your mouth. Like basically at this point, and I'm not trying to be bearish, I'm just being realistic. All right. I'm being pessimistic, but let's just say the sentiment in software stocks is just not good right now. And I'm really hoping that things kind of turn around today. But I'm looking at a lot of software stocks today, and it's not that great. Everything is all semis this morning, of course, in the hyperscalers, or at least was the hyperscalers. We have IGV down 80 basis points today, and we have stocks up 2.19%. So Zeta is standing out there like an animal pumping into earnings into a bunch of red for software. That does not make me feel super confident. But of course, I have Zeta Leaps. I have shares. Going to hold into it, to hold on to it in earnings. The leaps aren't even that big of a size, but, going to keep chugging along here. It is what it is, right? This is the name of the game.
Yeah, I'm going to say the opposite. Just keep buying, guys. Just don't stop, keep buying, if that makes sense, Like Zeta's been trashed with the software, SaaS apocalypse. What do you call it, Ronnie? SaaS apocalypse?
Yeah, SaaS.
Yeah, or something like that.
Yeah, SaaS apocalypse. Yep.
I don't know.
No,
man.
SaaSgeddon.
SaaSgeddon.
Yeah,
it's just one of those things where I was telling some of my buddies, they're like, well, what do you think is going to happen to Zeta after earnings? I'm like, it's probably going to pop 5%, and then tomorrow will be down 3%. It'll be a triple beat, as it always is, raising guidance. And that's just the macro environment we're in as software investors. So it just seems like it came so soon. It's like earnings was 3 weeks ago, not 3 months ago.
Yeah.
It's true.
Yeah, year to date, we're down almost 10%, but the last month we've ripped 23%, including today's 4.35% move. We have to temper expectations. I believe they're going to crush it like they consistently do. But, to sit here and say like, yeah, like it's a complete fail if Zeta doesn't pop 10% after earnings. I don't know. They have been, if you haven't looked at like Microsoft and Amazon and Meta, and Teradyne and a lot of other larger companies, I don't know about you guys. Let's talk about that for a minute. What are we thinking about the reactions to some pretty stellar and amazing earnings from like the Mag 7? And they're kind of just like finding one little thing and selling it off. It's kind of seems a little bearish to me. I don't know. Maybe it's just me. What do you guys think?
I think we're just exhausted with macro. We're exhausted with uncertainty, and so there's no incentive to buy and hold and go risk on right now because we don't know what's going to happen.
Yeah,
and so I think bears are just in control, and they'll find one thing and run with it.
Yeah,
but it'll change. It always does.
It's like people are still not buying into like they're still not getting out of that SaaSgeddon narrative for sure. Cause you like saw ServiceNow, like they beat and they did good, but then it was like one little thing. And then Microsoft beat and they did good, but then it was one little thing. And like these companies have been sold off so much. Meanwhile, it's great. Meanwhile, semiconductors are like it's 2024 again, and it's like, yeah, AI is here. Like it's been here.
No, that's
But
the
they are
worst
just,
thing is that we are at all-time highs, but I feel like none of our portfolios are at all-time highs.
I mean, not mine. I mean, Zeta and Oscar are like two of my biggest positions across the board, and then beside like in the Mag 7 land, Meta and Amazon are like two of my biggest holdings. And Amazon's done really well, but Meta's kind of been, it's so funny. They're like, oh, Meta's spending too much. you look to their left and right, and you got Microsoft and Amazon and Google. They're all spending just as much, or more.
Right.
So, but yeah. But anyways,
Go ahead.
my point was SaaSgeddon is still here. That stormy cloud is still over our head. So I would honestly be looking for some headline for them to nitpick something here in the Zeta earnings. Do I think they can find something? That's a whole nother story. I don't know. It's going to be pretty hard. They're going to have to be looking with a magnifying glass, I think, to find something bad in Zeta's earnings, just as if they continue to do what they've been doing recently. So, yeah, they're up 23% in the last month. They're up 4% today. Me personally, I don't know about you guys, but I'm totally fine with another pullback. If they can pull back to like 14 to 16 and make a higher low on the weekly time frame, I am completely fine with that, and it gives everybody another chance to buy. Will people buy? I don't know. I will, but
Yeah, I'm in the same boat. If we pull back on earnings, I'm definitely a buyer. I'm actually kind of low key bullish going into earnings because over the last few days we had some silent activity happening. We had KeyBank and RBC just apply some new updates to their forecasting. KeyBank actually changed their posture from sort of just, I think it was like a neutral stance to overweight Zeta, and they've changed their price target to $22 a share right before earnings. I think it was on the 28th. And RBC released like an internal report, so we've got some eyes on it, but nobody's really leaked the full entire report. But it's by a guy named Matthew Swanson, I think, and he specifically called out Zeta Global by name and AppLovin by name, saying that these are two plays that are that he's quite bullish on in the ad tech space going into Q1 earnings this year, which is quite interesting. Especially, he named a couple catalysts. One of them was the midterms and the higher spend going into the midterms and the FIFA World Cup. So I think it's going to be, an interesting year for Zeta. I'm pretty bullish. I think analysts are going to kind of shift, and I think that the SaaS narrative over time will also shift too. And we're going to start to see names with or companies with proprietary data really get a re-rating because it's quite a defensible position going into the AI era.
I do think that the software scare is real. However, I do think the margin of safety for a lot of these software stocks is pretty wide, right? So there was once upon a time, about a year ago, ServiceNow was trading at about 15 to 16 times EV NTM sales, and that was pretty expensive. And now we're trading at about mid-single digits, where valuation is a lot more reasonable, and some of the leaders in software are trading at pretty good valuations. And I'm not really looking for, let's say, Zeta to go to like $50 tomorrow, because to be realistic, they have to show up and continue showing up throughout earnings. And I'm only saying that with for my technical hat, right? But also for my technical hat is that Zeta is actually creeping up here above the 200-day moving average today. It's actually above all the moving averages today, which is actually a pretty good setup. So all the jokes aside, the chart with Zeta is looking better. Of course, charts look better as they continue to go up. But it is nice that they are coming into earnings, trading above the 21 EMA and the weekly, above 9 and 21 EMA, basically above all the moving averages on the daily. So it is good news to see that happening. for Zeta coming to earnings, but the market is obviously very bullish. We see what's oil at right now. Oil's coming down, which is good to see. Software, of course, has been taking a hit. You know, I think that scary. It's tangible, right? But I do think that buying Microsoft above $500 was probably a no. Buying Microsoft $400 probably makes a lot more sense because now it's trading at like 20, somewhere around 20 times forward P or something like that. But Zeta is actually a very attractive software stock to own based on valuation, based on their moat and everything. I also think that, you know, this is just for me because a lot of my portfolio is concentrated in a lot of semiconductors. So this year's been pretty well for me. I've bought my Zeta position and I'm not planning to add to it. I did recently add a small size of leaps to it. But if the stock pulls back, then I'm just going to have to hold on to it. That's just what it is. But that's just how I manage my portfolio. I manage things a little bit differently, but of all the software stocks, Zeta is one of the few software holdings that I do hold. And, you know, if the market continues to be bullish, which it definitely looks like it is, software needs to come back as a whole. I thought the Microsoft earnings were good yesterday. I mean, the fact that you had almost every single cloud business, Azure, Google Cloud Platform, and AWS, all beat consensus estimates and then guide for higher than that is like, look, software is not going anywhere, right? So it'll just take time. It'll just take time for these things come to fruition and for the obvious appreciation of having AI embedded in their systems to actually show financial cash flow. Look, Zeta better be profitable today. They better be profitable. I'm sure they will be, but they better be profitable today.
We'll have to wait and see. You know, sorry, what were you going to say, Ronnie? You go. I've spoken.
No, real quick. Just we're gonna say one more thing on technicals, and then we'll move off technicals and get more into fundamentals. But the moving averages are tight too. Time to expand, says Jackson is my quant, and he's absolutely right. So we have the 21 in white, the 21 EMA, and the 50 EMA in blue, and they are extremely, as you can see, they are just like have been coiling up here, right in this zone. Obviously, right at this volume shelf zone here, and you're kind of making this wedge pattern. And, you know, overall, you're not at April lows. You still did make a higher low overall in this channel. And I would say you can kind of like clear this out right here. This is mainly because of the hit piece and the lawsuit and all that jazz, right? This company is very far beyond the hit piece and everything. The lawsuit's still lingering, but this whole big drop, the company is way far ahead where it was back here. But yeah, you're just sitting on this volume shelf. You're coiling up on these EMAs and on the moving averages. My indicator down here is flipping bullish. You know, we're slightly breaking out today. Obviously, going into earnings, anything can happen. But yeah, I mean, you can definitely make a case that Zeta is early on and about to just, if they come through with earnings today and then like beat, raise, do all that stuff, and people are fat and happy and see this as not a, you know, Saskeddon hit piece company, then you could start moving up here, you know, throughout the next few weeks and months up to, you know, back to these highs during OpenAI partnership, back to these highs. Yeah, I mean, the technicals look really, really good now. They didn't, but now they do. And also we're coming out of this like very oversold area on the Williams percentage range. I just made a post about this today. You know, the last time you were down here was 2022 and you got to buy in a range of, you know, $4 to $6. You did very, very well, even today, right? And then last time was Tariff-geddon. You were able to buy between $10 and $15. And then we just scratched that surface again, right? Just a few weeks and months ago. So from here, I mean, things are looking pretty good. This is an uptrend right here. So if this continues, we'll go up to the red barrier here and, you know, we might finally get this clear skies and a break out of, you know, this kind of overall, you know, downtrend on the monthly. And yeah, I think we all can say that, you know, it's not a semis company, but we've seen a lot of companies move very, very fast. And we have to remember that this is still a very small company. less than $5 billion market cap. So if they do something spectacular today and the right people get bullish at the right time, this company can move very, very quickly. I think we can all agree with that. But yeah, at the end of the day, I just wanted to bring up that last piece. The technicals look really, really good right now. And you were so right. The EMAs and the smoothing averages, they're very, very tight at the right spot, right here at this consolidation zone. So go ahead, Nick.
All right, shall we just shift gears into kind of like what analysts are expecting, what the street is expecting?
Yep, let's do it.
Okay, so I think, Ron, you can pull it up, but I think the consensus is adjusted EPS of about 13 cents, which throws GAAP EPS. Okay, so that's the estimate right there. That's got to be adjusted. Yeah, it's definitely not GAAP. So I think GAAP EPS is somewhere between 1 cent and negative 6 cents, somewhere in that range. It really depends on expenses, especially stock-based compensation, et cetera. However, we do know this year that they plan to have stock-based compensation down between 3 and 4% of revenue, where last year it was between 14 and 15% of revenue. So it's coming down significantly. So I expect that the EPS numbers that we see are going to start narrowing, and that gap between adjusted and GAAP EPS to be a little bit more clear moving forward, unless we start seeing some more acquisition related expenses, of which I had a conversation with Nate. So Nate probably is listening to this right now, but he's going to hop on in about 10 minutes or so. Yeah, about 10 minutes. They did not guide for any acquisition related expenses this quarter. So I would not anticipate any to show up. If they do, that'll be quite interesting. I do expect probably a little bit of stock-based compensation. So let's wait and see.
I wonder if we get the actual chart. They show that chart again, because I know last quarter, remember, we were talking about it. They didn't show that stock-based compensation chart like they did previously.
Yeah, that'll be interesting to see if they pull that up. But as for revenue, top line guide, the company's guiding somewhere between, I think it's 39 to 40% year-over-year growth. The street is essentially in line with that. I've seen street guides between, I think it was at 370 flat and 370.4, which puts it at, I think, 39.9 to 40% year-over-year growth. My estimates come in around 42% year-over-year growth. Nate is about 45% year-over-year growth, and Davis said 60% year-over-year growth.
Did I?
No, I'm messing with you.
I was like, I just threw some random numbers out just to.
Yeah, I saw your post.
So bad. That's it.
That's it. Yeah, but that's about it, guys. Ronnie, how about you? What do you think? What's coming up? What do you expect?
Demolish, man. I haven't really sat down and like played the what are they going to do game, like with the numbers and everything like that. I haven't really done that. I just have such high expectations for them, and I know how David operates, and I just have such high expectations for him to continue to crush it as a leader and get them to be doing, continue this beat and raise. I mean, I just laugh because we could literally be talking about, continue to do this, right? Continue to track the company, and we continue to do these earnings calls. We could be taught like, do we just stop streaming once the streak ends?
Yeah, I'm selling everything.
Like, but like seriously though, like, does it get to 25, 30, 35? Like, could you imagine? Like, that would just be insane, man. Like, when are people gonna, wake up and take notice?
Well, it's interesting though, because like he talked recently in his interview just the other day. And by the way, that's quite ballsy to have an interview just so close to earnings and actually talk about guidance, theoretical guidance, and just how the company's performing. And David was quite bullish, forward looking, obviously. And they mentioned, their track record of 18 consecutive beat and raise quarters, and kind of alluded to a 19th. They cut off that video, which I felt was interesting, right? Clearly he said something a little too much and they're just covering their butt a bit, which is fine. I mean, I would too, if you have the ability to kind of edit those videos. But what he did mention is that they're able to provide like extremely accurate pictures looking forward into what the company is likely going to do the next quarter, the next year, and even theoretically out 2 years because of their payment structure and how they collect data. So they're really in tune with the macro of the economy and the consumer. So they're really able to kind of guide with precision. So honestly, Ronnie, you asked the question, like, will we see 25? I definitely think it's possible. I don't see that this company wouldn't guide accordingly, right? They may guide and like start bringing down guidance significantly one year due to maybe a recessionary factor, but they're probably going to beat still that guidance, just how they're going to position themselves, right?
Yeah, I fully agree. Yeah, on Seeking Alpha, they're expecting 40% year-over-year growth in the middle, right? So 369 to 370, almost 372. That's 13 analysts thinking that way. I think if I had to guess, they probably come 372 or higher. I think they beat the high of analysts.
I think
And
so
then
too.
EPS wise, very wide range of non-GAAP 7 cents to 17 cents. I think on this end, the non-GAAP, we probably see 14, 15 cents. And then for the gap, we probably just squeak out, hopefully, a 1 cent. It's going to be tough, though. I mean, honestly, like, I don't know about you guys. I could see them not being gap profitable for EPS this quarter.
It's
I could
possible.
see like a negative 0.2, negative 0.1 type situation. And that might be enough for people to get super bearish and, oh my gosh, blah, blah, blah. But, like they said last quarter and guided for 2026 guidance calls for, where are we at? Yeah, guiding to GAAP net income positive in fiscal year 2026. That's what I care about. How we get there, I care about 2026 is the year that Zeta goes profitable. After that, it's the year that we really start saying, okay, we went profitable in 2026. Now let's start seeing that hyper growth. Let's start seeing that EPS growth. Let's start seeing you get lean and mean and start really, driving down to that bottom line. That's what I want. This year is a prove it year, I think. 2026, let's be profitable. Then let's go from there. That's how I'm thinking about it.
I agree. Sam, you have something to say?
I was going to say the NASDAQ reached an all-time high just now.
Oh, wow. Okay.
We are
Good job,
cooking,
semis.
guys.
We're cooking, man.
Where's the bell?
Where's the
Yeah,
bell?
okay.
Where's the bell? I know you have it, Davis. Where's the bell?
Come on, Davis.
No,
We know you have a
I
little
would-
bell in your pocket, man.
I would throw that thing away so fast.
Okay, somebody in the comments asked me, Nick, what can they do to get stock-based compensation down to that low percentage? Well, you could do two things. You can stop issuing so much stock, or you can start growing your revenues ridiculously fast, which Zeta is about to do. So it's likely a combination of both. I anticipate that they likely won't make an acquisition this year. Maybe, knock on wood, maybe they'll make an acquisition towards year end, perhaps. But they clearly don't anticipate to issue a lot of stock-based compensation this year in comparison to last year. I think last year when they gave the forecast, they anticipated that Marigold Enterprise acquisition, which had a lot of stock-based compensation associated to it. So, I mean, I think you just execute, continue to grow the company, and stop issuing so much stock.
Dude, look at these earnings surprises for Zeta since 2023 per quarter.
Wow, that's remarkable.
I mean, they just talk about some sandbag.
Yeah. Oh yeah, guys. Like they're really sandbagging, by the way. Ronnie, remember our live stream just Monday? And we brought up that post I made just not too long ago. Zeta guided for 0 Marigold Enterprise growth for the next 3 years. Not only this year, next year, but also 2028. So it's like that is the ultimate sandbag. You make an acquisition that is actually growing year over year. They're growing 6, 8, 10, 11% year over year. And then you forecast forward saying, yeah, we anticipate 0 growth. Well, that's the ultimate sandbag. So I think Zeta is very well positioned to surprise huge, pretty much, in my opinion.
Another comment I saw, I'm not going to dig through whoever you are. I saw your comment. They said they want to see customer growth. So I was just scrolling through and I saw this this graph. This is just, if we do see customer growth, you have to like take it as like customer growth for certain companies versus customer growth for Zeta are very, very different. And what I mean by that is you can just simply see this graph. When Zeta gets a new customer over the next 1 year, 3 years, 3 to 5, and then 5 years, they take that customer and they grow them into a bigger spending customer, spending more and more and more and more. And if that doesn't tell you Zeta does have a moat, if that doesn't tell you Zeta does provide amazing value for their clients, I don't know what does, because this graph is insane. This is one of the best graphs, and this is what I talked to Chris Greiner about, and he went full nerd with me during our interview, and I loved it. Like the amount that they're growing within each customer. Nick literally wrote up something on X. You want to speak on that, Nick, about like how the whole like they don't even have to grow customers?
Yeah. So David said not only in my interview, but Sam's interview with David Steinberg, the CEO of Zeta Global, he mentioned that they don't even need to grow their customer base. They just need to keep the existing customers, and they will become a $10 billion company eventually. Now, we internally here amongst the lot of us, we anticipate somewhere between the next 7 and 10 years that they could become a $10 billion a year company. But that comes from the CEO himself. He said it's not part of their core strategy to acquire new customers. It's just to increase the percentage of wallet share that they have from their existing customers. That means that, they have, I think, what is it, guys, 51% or 54% of the Fortune 100? Yeah, 51% of the Fortune 100 companies. Now, these Fortune 100 companies, they work with Adobe, they work with Salesforce, they work with, probably the Trade Desk and AppLovin and whoever may be, right? What you care about is the percentage of total wallet share spend across the entire marketing industry and how much of that you could soak up each year. Because every single enterprise in those Fortune 100 companies, they're spending on marketing every single year. And that number tends to go up year over year, minus recessions. What Zeta cares about is soaking up a larger percentage of that every single year. If they continue to do that, they end up pulling that wallet share away from the competition without necessarily forcing a customer to leave one of those competitors. That's what matters to Zeta. And that's how they increase their market share, thus wallet share, and grow as a business. Eventually, to that roadmap target of $10 billion a year.
There's a company that I actually love more than Zeta, and one of their strategies that they utilize is acquire, expand, scale. And that's just what Zeta needs to do. And that's what they're doing.
Let me guess. Actually,
customer churn. So somebody asked about customer churn, right? Well,
Yeah.
NRR, what was it? 120 or 128? Yeah, so it's 120. So
121.
net dollar retention. Sorry.
No, 120. Yeah, I thought it was 121. Never mind.
Yeah. So the net dollar retention rate was 120%, right? So that means for every dollar, you have another $2 to spend. Sorry, another 20 cents to spend. My bad. Sorry, guys. But that was just the core business was 120% at NRR. The entire business plus acquisitions, so that means including Live Intent and including Marigold, theoretically, was 128% NRR. So it's even more impressive. Pretty much Zeta's churn is 0 at this point.
Here, I put up one of your posts.
Well, that metric, it takes customers from 12 months ago and then compares it to how much they're paying today.
Yes.
Well, so that's like as a whole. Yes. That's as a whole unit, which is probably more important anyway.
Yeah.
I don't think they've ever mentioned anything about customer concentration. That's probably when you'd have to worry about it. Like there's a lot of people there's a lot of companies out there that have client concentration, which poses a major risk in case one of those clients leaves, especially if it's not really a mega cap client per se. We saw that with Poet, right? So Poet had, they had a promised contract for a Marvell technology, and once that fell off a cliff, the stock dropped, right? I don't think Zeta has that same issue. Like they're not going to say one day that we lost this client and it's going to be a big deal. It's not even known in public that who their clients actually are, or maybe it is, but it's not going to be that one day. This is an issue if Zeta loses X client, right? But whenever it comes to software stocks, there's a few metrics needs to look on. One of them is, of course, dollar-based net retention rate, which is what Nick pointed out. ARR growth. I would say ARR growth or RPO is probably a bit more important than revenue. Of course, revenue is important because that translates into what was billed today. But those are forward indicators of what clients are going to be paying in the future. So if they're guiding for 35, 36% growth and their NRR is about 121% or something like that, then what does that tell you what's going to happen in the future? They're going to accelerate and they're going to ramp up. Software stocks need to continue growing and accelerating, because if they don't, you're going to see a service now after the earnings. So I have confidence they're going to be able to do that. I do think that a large amount of the sell-off was a software issue, right? A sentiment issue when it comes to software. So once that comes back, you're going to get the leaders in software come back as well. And unfortunately, there aren't too many software stocks that are out there besides inference-related stocks that are catching a bid in the midst of this AI environment. But it'll come back one day. Software stocks usually have these major pullbacks, and then they come back.
Guys, they've never missed revenue guide.
Yeah. Yeah. Well, that's the 18 beats, right?
Are
Oh,
any
yeah,
of you
true.
annoyed with the excessive sandbagging? Like, I hate how that's become standard amongst all companies now.
Yeah.
I am not, because Wall Street plays a very, very Wall Street's very cutthroat. For a small company like Zeta, that's a sub $5 billion market cap. If they were to miss, they're just gonna mess them up. They're just gonna drop them hard.
You don't stocks get re-rated based on increasing estimates or revisions of estimates to the upside. That's an EPS growth, acceleration of EPS growth, because EPS growth, the first derivative, is what determines its price today. But acceleration of EPS growth, or the second derivative, is what determines the re-rating of a stock to go higher. So that's the reason why we've seen that whenever software stocks, they accelerate revenue and beat estimates, they tend to go up, right? It's not even just software stocks, it's any stocks. So we'll see what happens this quarter. I mean, it's good that they're sandbagging because the official estimates are based off that sandbagging guide. So if they come in and beat, that gives it a higher probability the stock is going to go up.
All right, so every single Q1 for them, they've beat by 4 or 5%. They've surprised by 4 or 5%.
Yep.
So it's what? Where are we at? 370.
That puts it at what, 384?
4.5 puts it at 387.
Tanya, it's going to be 388.
Yeah.
Interesting. Yeah, because my guide right now, I'm anticipating them to come in with 375.55 million. That would be 42% year over year. Ronnie, can you run the numbers real quick? If they came in at that 4.5 that you guided for, or that you just factored, what is that year over year growth?
What were they last year?
Hold
on. I got it right here. Q1 264.
Yep.
Yeah.
Is that it?
264. Is that right?
I'm optimistic.
I gotta double check. I don't want to be an idiot.
You may need to factor in that beat number on the right hand side as well.
Oh, yeah.
Hey, can you guys let Nate in?
Yep.
No, keep that guy out.
There.
What up? What up,
Hey, man.
gents?
Three plates back.
Dude, I'm honestly so close to 3 plates. I want to hit it so bad.
That's insane.
That's why the stock's not pumping.
Yeah,
I know.
the gains are in the wrong place, man.
Welcome aboard, dude. What's up? How do you
Yeah,
feel?
they're gonna crush. They're gonna beat triple beat and raise like they usually do.
Yeah.
I'm hoping sometime this year they come in a little more aggressive. I think they take the SoFi route of a conservative beat and raise, and the market doesn't really care. They want you destroyed earnings, and you're going to crazily guide up to the upside, like a
Yeah.
Palantir, like other companies. And I think if Athena is the turning point, like I want it, like I'm expecting it to be, I hope they start to guide slightly more aggressively. Like, still, obviously, you want them to not miss their guide, but I'm hoping they don't just do like these little, what I think are silly guides, because they always beat by 4 or 5% every single quarter. So clearly their guides are conservative.
Yeah.
Um,
Yeah.
but yeah, that's what I'm looking for. I think I'm looking at 385 million rounded up to what they're going to hit on revenue, and that's like a 46% growth rate.
Wow. That's
Which is
10
gonna
million above
be-
me, man. Wow.
Which is going to be insane.
Yeah.
Like
You're
if
so
they
very
even get
screwed.
close.
Yeah, Nick,
Not
there's
very.
the gap. Estimate is
Right.
6 cents.
Yeah.
So yeah, them coming in at 1 cent would be huge.
Yeah. Would
But
be
I would be
huge.
happy with like anywhere above 3 cents.
Now, I was talking with Nick about this. I think there's a little bit of a chance they miss EPS in terms of not becoming income positive, because last quarter, and I could just be reading between the lines too much. Last quarter in the press release, they said full year 2026 expect positivity, which to me means it's not guaranteed for each quarter. It just means that the full year of 2026 they'll be income positive.
Yeah,
Which when I've seen companies do that, to me that means they kind of, sometimes you have to read between the lines of like, maybe it's not. I could be trying to read between the tea leaves too much. But I think there's a chance that, if they do beat, it's like literally by 1 million or like 900K, like just enough to say they're positive.
Yeah, they usually sandbag that guidance. So
Yeah.
you know, it might seem like that on the surface. This would not be would this be the first quarter that they missed EPS if they did?
I think so, because I think 18 consecutive beat and raises. Does that include net income? I think it just includes revenue, right?
Oh, you're talking about like actually like missing?
I don't think they've ever guided EPS ever.
No.
See, that's
No,
why they've
they've
never
missed
missed it.
EPS before.
No, yeah, they haven't. That's just all.
They missed EPS.
analysts.
They actually missed EPS last quarter according to Earnings Hub. Did they? Yeah, they
Well,
missed.
probably
No,
missed the
really?
analyst expectations. That's probably what it was.
Yeah, so I
Yeah.
think that's what I'm looking for, though. It's just like, we'll see. I could be wrong, but
Yeah. Yeah. You know what,
We
Nate? I
talked
think I
about
agree
this-
with you. Sorry, Ronnie, but I just want to say this one point before
Yeah.
we move on. Nate, I agree with you, your thesis about, at some point in time, they're going to just start blowing everybody out of the water. And I think that's going to be Q3 and Q4. And the reason being is we have the FIFA World Cup this summer, and we also have midterms in Q4. And I think spend is going to go through the roof for ad tech companies and martech companies.
And we have 6 months post Athena at that point too, which is
100%. 100%. Like the flywheel engine's there. Every single tailwind starts to be, starts to really kick in, and the potential is huge for this company.
Yeah, 100%.
Do y'all think
Alright,
they've
Ronnie.
collected enough data from the Athena rollout to guide more aggressively? Or do you think
No,
I
I
don't
don't
think
think
so.
they will.
They're not
I don't
looking
think
to
so either.
monetize it yet. They're just looking to continue to provide for customers and make it like an awe factor. And then as it's an awe factor, I'm sure they want word of mouth to work, and then they keep getting more clients. And again, they don't even need more clients. They don't even need new clients. They can get to a $10 billion market cap company without that, just by growing their current client base. But I think there's a lot of room to grow if they get now they're not going to get that AIP chatter word by mouth, right? But they could get any kind of chatter is good, right? So even like we talked about in the pre-show or pre-earnings this Monday, the UFC and TKO that owns UFC and WWE, how their chief marketing officer basically lauded Athena and said how great it was. That's like, you keep getting stuff like that, yeah, you're gonna get businesses calling and wanting Athena. But one thing
I'm hoping they list out more slides. Yeah, go ahead.
Yeah. Real quick, I just want to say Q1 is typically has been their worst quarter EPS wise. We talked about this on Monday as well. You know, there's negative 38 cents Q1, there's negative 23 cents, and then there's negative 10 cents. It's bad in the beginning of the year, and then throughout the rest of the year, it gets good. And then we had the one profitable quarter, right? And then we just had that again right here. No, obviously it's going to be that same fourth quarter, which has been their best. So coming in and getting something like, you know, here's 10 cents. If they get down to even the 6 cents they're guiding for, it's better. You know what I mean? But yeah, so I think, yeah, Nate, I think you're not wrong, like at all.
No.
Like to think like they could miss, but as long as it's not negative 10 cents, then I think it's okay.
Was that negative 6
obviously-
cents? That was analyst estimates.
Yeah, negative 6 cents.
Was it adjusted or gap?
That's gap. That's gap.
Gap. Okay, cool. Okay.
Yeah,
Yeah.
right.
I was like,
Right
adjusted
here.
is
adjusted,
13.
that'd be a problem. Yeah.
Or-
Okay.
Yeah, no, adjusted is 12 cents.
Okay.
Okay. Cool.
So, and then this is showing obviously gap right here.
Okay.
So-
Also, how were we up 6% earlier today? What happened? Like just regular market pump, like the Nasdaq?
I think
pump,
we
probably?
talked about it was retail. Oh my gosh, we came down a lot. Wow.
Yeah.
Wow.
Nate,
Yeah,
you hopped on screen,
we were
dude.
up 4.5% when we started the live stream. What the heck, Nate?
Yeah, man.
You're muted, Sam. By the way.
Yes. Yeah. He's still
I hop-
muted.
yeah,
Sam's still
We were pumping the stock. I said we spent the first 30 minutes just pumping the stock, just looking at options change and just buying the hell out of it. And then, and then you joined and then started lifting weights and stuff.
took all the gains out of it because I need it myself. Because like Pagaya is pumping too. It seems like just all the things that I've seen that are bucketed into SaaS. Like Pagaya, for some reason, it's like also financials, but it seems like SaaS is just kind of moving for some reason. I don't know if there's like a new thing that came out, but
It's Google, man. It's Google. It's wild.
yeah, Google destroyed earnings. My God.
Yeah, Google's carrying this boat.
Yeah,
Oh
one
my
thing I
God.
actually have to say on Google,
Google's like, I got this boat. Microsoft's sinking ship. Dude,
Google is
Microsoft's
interesting,
done.
guys.
Dude, Microsoft's so done, dude. Claude's gonna just eat Microsoft.
I don't think it's done. Like I feel like it's
Trolling.
first of all, it's Microsoft. Second of all, they're not just a software company. They make a lot of money off other services other than just productivity.
No
But
sarcasm.
It was-
oh, okay, my bad. Dude, there's so many stocks to report today. Holy cow! Roblox, Monolithic Power,
This week
First
and even
Solar,
next week is
Rivian,
insane.
Atlassian,
There's so
Roku.
much.
Jesus, I'm like
Yeah,
adding
this
all these to my
week-
list.
Isn't like 70% of the S&P reported this week, or 80% of the S&P reported just this week? I mean, really, yesterday it was like
Something like
40% of the
that,
S&P.
massive.
I'm not even trading that much, honestly, right now. I'm like, all right, it's been a great run up, but like I'm not about to just get, blasted by a bunch of misses or earnings or whatever. Like,
Yeah.
and you had FOMC yesterday too, which was a nothing burger, but how crazy would it have been if that dude just walked out and he was like, raise it.
Yeah, raise
Raise
it.
it quarter point. How you like that, Trump?
No, so the thing between Powell and Warsh is that Powell will only swing the bat to whatever the market gives him. Warsh, we don't know. So that's
Yeah.
like the only part that's kind of uncertainty, which I'm surprised, like why the market just doesn't care about it, especially with the oil above $100 again.
Well, I mean,
But dude,
they say-
Ron,
they
huh?
They say that these new Fed chairs, they get tested. And I know Tom Lee. I mean, can't really trust Tom Lee, but Tom Lee's analyst is pretty solid, and he's calling for they're calling for like a 10% correction. That feels like a bear market, I guess,
Never.
to kind of test. But yeah,
I don't trust it, man. No one on Wall Street or anyone can tell you where the market's going to be. There's only
Nobody
probability.
in
and
general
they
can
can
tell you.
easily be wrong. Well, the issue is that you have sell side analysts saying stuff, and then people are going to listen to them, make moves based on them, and then if it doesn't go in their favor, they're stuck in cash and sitting in this position right now, right? So this is just the crazy melt up right now, and just enjoy it while the show is running.
The thing
Yeah,
is, like
the
most stocks
semis,
aren't even
too.
most stocks are even overvalued right now. That's the part that I don't.
Yeah,
Not
a lot
even
It's
of
just
stuff.
semi-
it's just semis launching everything up, and then some stuff came
Yeah.
off the bottom a little bit. But like, it doesn't make me feel good. And we'll get back to Zeta here after in a minute. But It doesn't make me feel good that like, like SoFi and Robinhood and Microsoft and like a lot of these and ServiceNow, these companies have been beaten down. Okay, they bounced a little bit off their lows, but then they just got crushed after earnings. Like it's like semis can't carry this boat forever. So
Especially
like
when
you said,
Microsoft had a killer earnings, like the earnings weren't
yeah,
even
they still
bad.
got sold off 5%, which is just
Yeah,
like
their
it-
guide was really good. I'm surprised they
Like
sold
SoFi
off.
and Hood to me make a little bit of sense because they like SoFi was super soft guidance. Hood missed revenue by like a
Yeah,
couple hundred million or a couple
and
million.
Hood
EPS,
earnings
they got
like,
not good.
way, way-
Those make sense. But Microsoft doesn't make sense to me at all. I don't understand
Yeah.
Microsoft sell off.
Well, every single hyperscaler sold except for Google, which is crazy. It's crazy, but
Yeah.
at least now Amazon is green. Meta's bounced pretty considerably. Microsoft bounced a lot, actually. Yeah, Microsoft bounced a lot.
Yeah, they're down like 3% now.
Yeah,
But
It was
anyways.
fascinating too when it's like you're talking hundreds of billions in a bounce. It's like so insane. Like
I know,
20
dude.
Zetas in every minute traded
20
on these
Zetas.
companies.
Well,
It's just so funny.
Nvidia was down a lot today, and the
Yeah.
overall markets held strong. That
Yeah.
was crazy because you know how heavily weighted.
Wow.
I don't. CapEx goes up, all the clouds beat, Nvidia sells off. Like with this market,
That
literally,
didn't make sense. Nebula sold
makes-
off. Yeah.
yeah, all their RPO backlogs for clouds are up 2x quarter over quarter, but the Nvidia sells off. Like what? This market's stupid. It's dumb.
Yeah, dude. Honestly, I don't get it. I don't get it.
Yeah, if we don't see
Speaking of-
rotation, then it's going to kind of be hard for this market to keep melting up just off semis. Like
Oh, I
I
didn't
think we can
realize-
get to a 2021 level, but you need rotation. But I don't know what
Nebius
that
is-
catalyst is.
Nebius is the only data center stock besides CoreWeave that's down today.
I know, dude. Don't tell.
Shit.
Stop. Don't tell me about that.
Finally.
Let's wait till the Iron Bulls come out of the woodwork and start saying like all this crazy stuff. I don't understand this battle. This battle is so dumb.
No.
It's like,
Dude,
guys,
Nate started the battle. And then
He
he's like,
did?
"Oh, let's calm
No.
down, guys. Let's go." Like,
No,
come on,
no.
dude.
I have
Well,
iron balls right now, so
the clickbait on that battle is great.
I love to mess with them, but I don't get serious. So people got like really into it. I'm like,
Oh,
guys,
people are like,
we're
yeah.
trying to make money here. Who cares?
I
Yeah,
know, like
that's
it's not a
funny.
battle with each other. It's a battle against beating the SP 500. That's all.
Right, which we both have destroyed. So like, who really cares?
All right, so I guess Zeta's going to go negative right here before the close.
Oh wow, it's dropped that much.
Yeah,
Oh man.
it's selling off. No one's trusting it. Or the whisper number came out. Uh-oh.
Well, you know,
Listen,
we all
it's
know
better
Wall
than
Street.
being up 8%.
Wall Street plays games, guys. Wall Street plays games. Like they know retail is going to buy into earnings and sit there and say, "I don't want to miss this pump," and then they're buying well before earnings, and then they're running it up, and then they're selling it off before earnings.
It's a 4.5 billion.
But again, I am not opposed to this thing coming down and things settling down. I have been trying to buy more leaps, and I can't. I can't because I logically can't when the implied volatility on these leaps for 2028 is like 80%. What are you guys doing out there? Look, I get it's a great company, but like leave some leaps for the rest of us. Chill out on spamming the leaps button. Like you guys are pumping this, and when the IV's that high and you're buying leaps, you're gonna get crushed if we come down at all.
Yeah.
Especially if you're buying out the money. If you're buying, oh, dude, and I said this on Monday too, guys. Like, if like, yeah, I'm not gonna tell you what to do, but like,
I'm curious. Before I know we have about 5 minutes still, or 7
Yeah.
minutes. What did everyone say for a revenue gain? I wasn't here, obviously. I probably missed it. But is everyone bullish, or is there anyone bearish here that thinks they're going to come in pretty low?
Everyone's bullish.
388.
yeah,
388. You said, Davis.
Yep.
Nice.
yeah. Look, we're pumping back up now.
I was 375.55. That's my target, which is
375?
42%.
So you're like you basically think they're going to beat by 1.5%.
Yeah, 1% and a little pump to Marigold. So I guided for 327.3 to core revenues and Marigold revenues at 48.2.
Got
Keep
it.
in mind, like
Okay.
they guided Marigold flat for the entire year, next year, and the year after that, which
Which
is
is so
absurd.
crazy.
Crazy,
It's so,
guys.
it's insane.
This before they acquired the business, this was a business that was growing just grew 6% year over year and was planning to grow 10% year over year. So, like, it's crazy to me. Like, this is the largest sandbag they've ever done. ever done. And that's one variable for growth. That's only one. Doesn't count for international expansion, Athena, and then the flywheel effect of selling customers into Marigold solutions, like Marigold loyalty program, where you just collect SKU data on all their customers, like every single asset you could publicly obtain through that customer database, and just enhance it even further. I don't understand how people are bearish this company looking forward. I genuinely don't. Like, this is a data hive, literally.
So the company consistently says, and David has consistently said, we can see ourselves growing 20% plus on revenue growth yearly as far as the eye can see.
Yeah.
And you see here, analysts are just not buying it. They're just not buying it. Like, we're talking about, given these like 2, 1, 1, whatever, but like even just next year, 16%, 14%.
Yeah, I think
Like, they're just not buying it. They're just not buying that this company. And the funny thing is, they could legitimately go from 35 to 40 to 42 to 45. You know what I mean? Like, they could just.
Guiding for 10% growth in 2029 is hilarious, by the way.
Yeah, that
is so
and,
funny.
and remember, these are revised. These are revised because you guys remember the last earnings call, they upped their 2028 guide, and then like they were all dead wrong. Like, they were talking about 2028 like in 2031.
Man, those 2029 numbers are like TTD growth. It's crazy, man.
Like, I'm pretty sure the numbers are still messed up. Like 2028, what's our 2028 guide? Let's see.
Also, Zeta's upticking a little more. Up 3.5% now.
Okay, 2.3 billion in 2028. That's an implied 23% compound annual growth rate. Where was
the company themselves guiding for that, and then they're guiding for
crazy, man.
They're at 2.33, upwards of 2.44. But again, it's 5 analysts.
Yeah, it's clearly they put their finger in the air and they're just like, "Yep, that's the number," and just completely bearish, man.
Yeah, look, now we're climbing back up.
Yeah.
Dang, all right,
I'm extremely bullish, like forward looking. Honestly, we look out to 2030. I think this is a great company, and David's fully convinced that this is a company that's going to be pivotal in the future of marketing and martech. I think they're actually going to kind of translate. And I mentioned this on Monday, translate more into business intelligence. I think there's huge ramp up over there for them. A ton of potential, because once you have that intent and ID graph, you're able then to provide insights to corporations that nobody else can.
I'm excited to see that Fortune 100 graph again, or that graphic they like to make. I'm hoping it's like serving 53%, maybe 54. Maybe,
I want to see that improve too.
Of the 100. I think that'd be cool to see. Like, more in the quarter of Claude having a massive, kind of jump. Companies are still looking for a marketing company, quote unquote, to help them with marketing. And so I think it just solidifies it even more for me. But I'm hoping that goes up. I would be a little worried though if I did see that come down. If I see that serving 48 out of 100 instead of 51, I would be a little concerned that, like, companies are looking for ways to not use Zeta.
Yeah, I think they only update that every year, to be honest, that full year, like Q4.
No, I think they updated it from Q3 to Q4, if I remember.
Did they?
They did, yeah.
Yeah, I can double check.
I mean, we just looked at it on here.
In Q3, if Q3 they had 44 of 100, and then Q4 they had 51 of 100.
Yeah, because that was a full year guide.
Yeah, but they had it in Q3 as well.
So
Look, they
from
just need to, like,
Q2 to Q3, they changed?
Collect the Pokemon. Got to catch all these automotive companies. We got to catch all these financial companies. We got to catch all these tech and media companies. We need to get this last airliner, man. We got to get that last Pokemon. We got to get that Charizard, man. Like, let's just
get out there, man.
Them all.
Come on,
I know. I should bring the Bulbasaur on.
6 of 16 of the largest insurance companies. Those are rookie numbers, man. We got to bump those up. I want to see at least 8 this quarter.
What are they, like? What is that 16? Like, how do they include the 16 number? I'm curious. There's that many insurance companies that are that big?
There's a lot.
Yeah, there's a lot.
I guess there are a lot. Yeah,
that's a lot.
I think they're saying that
airliners is pretty spot on for at least like the main ones. Probably.
I got 60 seconds.
Yeah.
Let's go.
Google's at 10%. Zeta's at 3.5.
10% is insane.
Google's up 10% today.
Man, that's crazy. Guys, you know what's actually interesting? I do want to say this before we close about Google. What was really weird was that Wells Fargo guided for 62% year-over-year cloud growth. Nobody else did that. They were 10% above, 10 points above the consensus among analysts, and they were 1 percentage point off of the actual the actual delivery numbers from Google for Google Cloud, which is really weird. Really, really, really weird. It's like, what did they know? What did Wells Fargo know that nobody else did?
Yeah, this dude.
Boy.
Yeah, he's
1
gonna be
o'clock.
posting a lot of other stuff, not Zeta.
No, I messaged him. He's posting Zeta.
Well, yeah, but I meant like just so many other ones.
Yeah, who is building something?
Yeah, who's got the
Bro,
who's
it's my
got the
kid,
kids?
dude.
Who's got the
Don't.
kids
Hey,
building?
they're building.
Somebody's
They're
building,
on it,
dude.
man.
A little Bob the
All
Builder.
right, we're at market close, guys. Market close.
Oh,
we at?
baby. Is it usually 4 or 5 or is it 4? I
4
forget.
or 5.
4 or 5, I think.
Okay.
They're spamming that IR page, boys. Let's go.
All right,
That's what
I'll
I'm
stay
doing.
on the. You guys, whoever's got it first, and just speak up. I'll stay on the charts here.
I think Riot just actually.
My kid's pumped. He's pumped for earnings, dude.
Ooh, Apple is earnings too. I totally forgot. And SanDisk.
Apple's in
What
30
the-
minutes, dude. Apple reports
I always Apple.
late.
Yeah. SanDisk too. Oh man, SanDisk is interesting.
I know, dude. SanDisk gonna be a market mover, that's for sure.
Yep. Especially for my baby Nebius.
Excuse me.
I'm
So we got
refreshing.
Apple, Zeta, Reddit, SanDisk, Riot, Amgen, Western Digital, Monolithic Power, Roblox, First Solar, Rivian, Atlassian, and Roku. And I think Monolithic Power just reported, and so
Here
did
we
Amgen.
go. 3 more minutes. 3 more minutes. I'm guessing we close tomorrow at $21 a share.
Okay.
I guess.
That'd be
Wow,
interesting.
Okay, bro.
Oh, that's my
I just
guess.
need an API to this page, man. I just need an API right in my Claude. Just give me the numbers. Hot
You're
off the
Claude.
press.
You're so Canadian.
Claude.
Claude.
Zeta's up 1%, but I don't think that's the real move. Roku's up 6.5%.
Come on. Let's see the
I
numbers.
forgot.
Yeah, 1%.
Show
might
me
not
the
make
money. Show me the money. I'm just like constantly refreshing. Anyone else?
Yes,
I know, I'm
same.
excited to hear you fire off the numbers. All excited.
Or sad. Hey, it could be our
It's-
first miss. Our first miss in
Hey,
4.5
are
years.
you on the presentations page or are you on the events page?
I'm on the IR page. Just refreshing quarterly results IR page.
Yeah, I'm on the. Yeah. Oh, okay.
Nick, I swear you probably already know these numbers and you're just not telling us.
No, dude, I don't know shit. I'm guiding 42% year over year. You guys over here guiding like, oh,
Yeah, but see, you're gonna hit it, and then it's
Yeah.
gonna be like, wait a second, Nick knew this whole time.
Western Digital beat, Monolithic Power beat, Amgen beat. Yo, so next time we're gonna all put in our predictions, and then we're gonna just do like a potluck, winner
we
take all.
start putting up Zeta shares.
Price is right. Price is right.
Amgen beat. Goodness, every company's beating.
First Solar miss EPS.
Of course they did.
No, miss revenue. Beat revenue.
Yeah.
Beat EPS miss revenue.
Monolithic Power Systems beat.
Aria's calling
Almost
me,
up,
man. Somebody
Almost up
check to see and
2%.
let Aria in. Somebody let Aria in. He's calling me.
I got him. Yo,
All right, Zeta's 2%.
Right on time.
I
Right on
don't know.
time. No need to worry. I'm here. Sorry, I was on the
Whereas,
phone
like, I'm
with the
gonna join
CEO of
this
Adobe.
We're looking for the numbers.
Oh yeah, for that.
Yeah.
We're not that important to you then, huh?
Yeah, I was. No, sorry, I was just on a really important call. They needed me on the strategy side of things.
What, they need to borrow money from you or something?
I know.
Yeah. They need to hit them up for money.
2.3%.
Come on, baby, show me the money.
I don't trust this pump. I want to see the numbers, man. I want to see the
Show
numbers.
me
I
the
don't
money.
trust this.
We're gonna get
Ah.
rug pulled.
I know. Just drop
Don't
one.
say that, man. Who let Aria on here? Shit.
No, did you not see what I did with
Negativity.
Amazon yesterday? I reverse psychology it.
Oh, okay.
Oh,
Yeah, because I'm Kramer.
Going down.
Kramer,
Oh,
the
wow.
second company
1%.
Kramer.
4.
Oh no, it's selling off.
Oh,
Are the numbers
Yeah.
out?
I don't think we got the numbers yet.
Not yet.
No,
Not. It's just algos. Yeah, it's not actually anything going on.
Some retail bet guy is just holding a bag right now.
Wow, Monolithic Power is up almost 7% right now.
They crushed.
Roku's up 8%.
down 2%.
I want to see the SanDisk report too. That one's gonna be
Same.
fun.
Yeah,
I'm
that's a
excited for
market
that one,
mover.
too.
I feel like
Come on,
the
baby.
where he's outside the White House and he's just like, "Let me in."
I love that meme. I love
It's
that
so
meme.
funny. Let me in.
Okay, we got a minute.
Anyone else nervous? Kind of nervous.
Yeah, my hands started sweating. At
I'm
first,
getting a
I'm like,
little
I
nervous.
don't
I'm not
care.
nervous.
And now I'm like,
I'm not nervous.
Dude,
I mean, it is what
I'm
it
very
is.
nervous
Okay.
for my one share Zeta.
So stoic. We get it.
Ronnie's one actual share.
Atlassian is up 8% after hours. Good news for software.
Oh yeah, that is.
Nice. You know, my company uses Atlassian, and there's no way we ditch that thing.
Every company uses them. I think that's the problem. Everyone uses them.
Yeah.
So who else is going to use them?
SanDisk,
True.
holy. All right. Beat by 60% on EPS, beat by 26% on revenue.
Oh my
Dude,
god.
What? We're going higher. We
Dude,
are
almost
going
6
higher.
$6 billion in revenue. The guy was 4.7. Holy
And they're
Wow.
down.
Where
What?
is the
No.
damn-
Give it time. Give it time. Give it time.
Oh
No,
my
they're down. I
god.
see
Look at this.
1.5%.
Look at this. That's insane.
David, where's this damn?
I know. I'm refreshing too. Don't be late. Don't make the
Bro,
earnings
he's
late.
probably at the happy hour still. That dude's just been like partying.
He's probably watching.
last 5
Probably
days.
watching this stream right now, trolling us.
He probably is watching. Yeah. He's like, guys, let's delay it. for a minute."
he's,
on their
he's in,
toes.
he's in the chat. He just
He's in the
It's a little-
chat.
yeah.
Rivian double beat.
This earnings season's been great. Pretty much everyone's beating besides the financial companies.
That's
Well,
not good.
fintechs. Yeah.
Actually,
I don't even wanna
Visa
look
did
at my
good.
Robinhood.
Yeah,
Yeah,
Visa
I was gonna
kicked
bring
ass.
it up. Yeah, did you guys see the Visa quarter? It was
Yeah.
insane.
Remarkable.
Dude, they're growing faster than
Oh,
Mastercard
Zeta's
now.
up 2%. Zeta's up 2% after hours. It was
I
like
don't have the
immediate
damn
pop.
report. Where is this?
I don't either. But it
Oh,
was like an
dude,
immediate
man,
pop.
it's-
Until he gets the report, I don't believe it.
2.5.
Zeta's down 6 or SanDisk is down 6%. Nope,
Show me the money.
2.5%.
Come on, man. Where is this thing?
Wow,
This is
Atlassian 12%, Roku 12%. Roblox is down 20%.
This is a good data report. Every
Whoa.
company's beating and going up. Said Cintas.
Come on.
Team crushed it.
Whoa.
Twilio crushed it. Software, yeah. This could be I mean, Microsoft crushed it too, so maybe people will oh, there it is.
Atlassian,
Zeta.
11%.
Zeta beat by 7%. 396 million.
Holy shit.
396.
Dude, that's like 50%. Oh my god.
year over year.
No
ladies
way.
and
Where's the
gentlemen.
report?
Holy.
Where's the report?
Yeah, I don't see it either.
Holy.
I don't see it.
EPS. EPS. They didn't report. Did they not report EPS? What's going on here?
Well, yeah, they don't report EPS yet.
Yeah.
There we
Wow.
go.
So,
Wow.
did anybody guess 396?
I was closest.
So that's
I don't have the report.
that's like 5 or that's like 6%.
He must get it through the terminal.
Or no, 7% for present.
No, someone
God
posted
damn.
online already, but I'm
396.
getting the details real quick. It's not the whole thing yet. They're up
Yeah.
2% right now. Software is doing really good after hours
50%,
right now.
guys. Holy smokes.
That's
That's
insane.
insane.
Let's go. That's wild.
Yeah.
Calm down,
Software
Jeremy.
is great right now.
Holy smokus!
Holy smokers, this ain't no jokers.
All right, they beat
Gross.
the
Who is this
guide for
number?
2026 by 30 million.
Dude, where is this report?
Yeah, where is this?
I'm just looking on Twitter, dude. It's up 3% right now.
Zeta, you better drop your report. David,
Yeah.
you're gonna hear from us.
Yeah, it's through the Bloomberg terminal, dude.
Guys,
Yeah,
can we
it
just
definitely
talk
is.
about that? I mean, oh my god.
50% growth. Are
50%
we?
wild.
Oh,
Where's the EPS?
man.
Why is no one
That's what
reporting
I'm wondering.
EPS
That's
here?
what I'm.
Because they didn't
That's what I'm
guide for
worried about.
EPS.
Guys,
There you go.
50% growth, and this thing's only up almost 3% now. 50% growth.
Valid.
50.
Honestly.
Like, if people don't start recognizing, I don't know. Like, what are we even doing?
Where's this report, man?
Who else
Come
is
on.
out? Who else is out there? in
50%
software
revenue
land?
growth. It trades at 2 times sales, by the way.
Yeah.
It's like cool. And it's profitable.
Crazy.
19.
There we go. 3%. You know what, Nate? It could be a 21 tomorrow based on 50% revenue growth.
Is that organic?
4% up.
Yeah,
There we
we're,
go.
we're
We're
going to have to
starting
wait
to
and
mark.
see. We're going to have to wait and see.
Yeah, we have to wait. I'm waiting for these. I'm refreshing my screen every 2 seconds. By the way.
Same here.
So this is
Okay,
why I let you
so-
guys do it.
So
There's
if they
gotta be
did
a certain portion.
50% and none of it was from Marigold, I'm
Oh,
done.
wow.
I'm
That'd be
done.
something.
Like,
Yeah, 50%. If there was no Marigold increase, that would be
That'd be
Up
wild.
5%. It keeps going up between 4 and 5%.
4%.
Come on.
I hope they dump it real
Okay,
quick.
I
Let
thought
me
it
get
was a
ready
joke
with some
now, but
shares
there's
so I
no
can buy.
there's no
All right, calm
presentation.
down, Ronnie. You had your chance 4% ago.
So yeah, at some
going
point, I
on
don't want
here,
stocks to dump anymore.
guys? What's going on
Yeah,
with this?
where-
Like, come on.
I just don't know why the
E
EPS.
Okay, I see the 8K. The 8K is here. So let me see EPS.
How did you? What?
Yeah,
It's
where
on
are
the
you getting this
website.
from?
You got to look in the SEC filings.
Oh, I see the AK now too. Yeah.
Yeah, I'm trying to find our EPS.
Where are you guys looking for this? I don't see this at all.
Got it. Here we go.
Net income, guiding positive net income for full year. They're not gonna make this easy for me. Where the hell's the income statement?
Yeah, I'm trying
Here
to
we
find
go.
net
Ready?
income.
I got it right here. All right.
Net loss.
Hold on. I got it
See?
right here. I got it right here.
Hold
Zeta global revenue growth accelerates 50% and beat and raise of the 19th consecutive quarter on the heels of Athena by Zeta launch. Delivered a revenue of 396 million for the first quarter, an increase of 50% year over year, exceeding midpoint guidance by 26 million. Grew super scaled customers count to 189, an increase of 19% year over year. And super scaled customers, ARPU grew to 1.7 million, up 21% year over year.
Wow. Increasing
Full year 2026 revenue guidance by 30 million to 1.785 million at the midpoint, but up from prior guidance of 1.755 million, reflecting year over year growth of 37%. Athena drove greater than 7 times more agent interactions and accounted for over 60% of AI platform usage in its first week of general availability. Wow. That's
Dude, why are they hiding the EPS? That's not cool.
I know that's what I don't like either.
They never
it's-
show
it's
guys.
in net
they've
loss.
Never shown it.
here we go.
Are you
Here's David
They've never
remarks.
shown it.
Accelerating revenue growth of 50% and achieving the rule of 67 in the first quarter is further evidence we are winning in this environment. Powered by the system, we have built proprietary data that improves with every interaction, intelligence that compounds with every decision, and a platform with AI at its core that allows customers to consolidate vendors into a single unified operating model. This result is average 600%. This results in an average of 600% return on marketing spend for our customers, said David A. Steinberg. Athena accelerates that system at the core operating system that brings AI directly into workflows and removes the barrier to enterprise-wide adoption. Zeta is the disruptor in AI-driven replacement cycle. 19 consecutive beat and raise quarters.
I've fed the documents through Claude. It says a negative 13.2 million net loss. But I don't know if that's
Yeah,
true.
no, that's true. But what about the EPS? I'm trying to feed into ChatGPT right now.
I had a feeling they'd lose this quarter.
Ew, you use ChatGPT? I'm joking.
Yeah, bro.
They increased their revenue guide for
Sorry to butt in, but the
you
earning
did.
presentation's on right now as well, Ronnie. If you want to stream
Is
that
it?
instead. Yeah.
Dang,
Yeah.
that's quick. All right, let's go.
See, I knew that full year guidance. I had a feeling they'd miss this quarter.
I think they need to put the EPS on there.
Yeah, they eventually will, but they never were profitable before, so they never did. Right? All they posted was EPS. EBITDA, adjusted EBITDA. But I'm sure they're going to change that for the future. To be honest.
Yeah, the conference isn't on yet.
Is it really a rule of 6-7? Are we serious? Sorry.
Conference call
Nice.
isn't on yet.
Grow up, Nate. Jesus.
Sorry.
Grow up, 3-plate. Jeez.
They
Ronnie-
increased their
Ronnie-
second quarter revenue to 419 to 422 million, up 4 million. Revised year-over-year growth rate to 36 to 37%. So they're not going to have another quarter bigger than this one on the next quarter on revenue. Yeah, EBITDA to 86.2 to 86.9.
I'm still questioning what made revenues grow that much. That's all organic. Well, 14 points of revenue growth, excluding Marigold, came from existing customers. 15 points came from new customers. So 29% revenue growth was organic. The rest was Marigold. Did I get that right?
I have to look.
It's on slide 3.
Okay.
And they
I got it.
increased every metric every metric for 2026. They increased it.
15
Revenue,
points of revenue
EBITDA,
from new customers. That's
Free
a
cash
lot.
flow.
Yeah. revenue growth.
All right, did we get like the pretty version now?
Yeah. No, it's
Yeah.
been out.
Yeah. Yeah, quarterly results presentation.
Okay, there we go.
Go slide 3.
Looks like it's
The
up
middle.
4% after ours, so that's good.
You see
All
the
right,
middle
I
there?
got
It says
more
14
numbers here.
points of revenue excluding. Oh,
Sorry, I was saying the stuff. 4%.
contribution of growth right there.
Yeah,
This one.
29% growth, revenue growth excluding Marigold.
So he's still almost grown 30% without Marigold, which is
Completely
bigger
organic.
than
Yeah,
they've
it's
done.
super impressive.
Yeah, it's very impressive.
And the full year. And it's still
Reckons a
guiding.
hit.
That's
Yeah,
insane.
three-
Does anybody
3
have
cents in
395
EPS.
or higher?
Sorry?
No.
Did anybody guess 395 or higher?
And revenue?
Uh,
No.
I did. Yeah, no, me definitely. I was here for the whole show. Yeah.
Yeah, they're tracking 3 cents of EPS for the full year.
Tracking 37% growth for the full year on revenue.
Yeah, they're gonna hit 40 for sure.
6% up now.
Yeah.
Yeah, that makes
But,
sense.
dude, Atlassian is up 24 freaking percent. Holy
smokes.
cow, dude.
Wow.
Wow. Software might be back.
Oh my god, 24%. That's insane.
Software might be back, guys.
Yeah, so they weren't profitable this quarter. Makes sense.
Yeah. Service
They grew
now
6.
is
They got 6 more super scaled customers.
Any slides on Athena?
That's what I'm looking for. Actually.
Yeah, we're looking for that.
This slide is not updated. This is the same slide as it was before.
Yeah, no slides on Athena. That's annoying.
51%.
Yeah, we're
They
gonna have to wait
didn't
for
collect-
commentary.
Huh?
No.
We're gonna have to wait for commentary.
Yeah.
Like you guys said earlier, it's probably just too soon for any Athena updates,
Probably.
Hold up.
Yeah.
which is unfortunate.
Go to
but-
slide 13. That's interesting. See key metrics for 2028 model? They're not there.
Mm.
Were they there on the previous slide?
Yeah.
Oof.
I don't know
Are
what's
they
up
just
with
bad at decks or
that. Yeah,
makes a lot
maybe.
break their deck?
Probably.
And this is a good quarter. I mean, I did honestly. They had a net loss, and I feel like makes sense. That's why they said full year guidance is positive.
Cow. 25%
Guys.
Atlassian.
Okay, yeah. So Marigold did 55.6 million in revenue. Next quarter, they're guiding for the same they guided for this quarter at 47.5 million, like they are for every other quarter. So, man,
Zeta's up 8%.
they're going to beat big next quarter
There you
again.
go.
Of course.
Maybe software's back.
So they're guiding for 21% core growth next quarter. Interesting.
Yeah, here you go. Percentage growth excluding Marigold and political, 21%. 20% for third quarter and then 20% for fourth quarter.
Wow.
Good quarter. I mean,
Software stocks are up a lot.
Well, I want to know what SBC is. That's,
yeah, I'm trying to find that too. Actually, that's literally what
share-based compensation.
I'm also trying to find free
I
cash flow
think
margin.
Fiscal might have it already.
Here's free cash flow.
Yeah,
Free cash flow's up
Fiscal already
to
has the numbers, dude. It's been 10 minutes.
Look at you being a little advocate.
Yeah, you're fiscal cheerleader.
Walking fiscal AI billboard, they call me.
Link in the bio.
Yeah, always.
Oh my goodness, man. That move in Atlassian is nuts.
Never even
Yeah, that
heard
is
of
pretty insane.
Atlassian.
I think SBC actually ticked up slightly. So you don't
Makes
love
sense.
to see that, but
Yeah. This is
I
they're
think
trying to get under control, though, right? Like they're
yeah, I think it's still declining as a percentage.
yeah.
Quarter
That's
over
all I
quarter
really
should
care
be
about.
down.
Yeah, same thing.
Yeah, the only thing in the deck is in their forward-looking statements about reducing it, but there's no numbers or anything.
Okay, it declined 1% quarter over quarter. So I mean,
Nice.
I'm not. Yeah,
it is what it is.
crazy. Free cash flow margin improved this quarter. Went from 11.8 last. Or wait, hold on. Maybe I'm reading that wrong. Free cash flow. Oh, that's the full year guidance. I'm sorry.
No, it stayed flat, I think.
It actually went down 4%.
Okay, so we have SanDisk is down 7%. We have Western Digital is down 7%. Might be a bit of rotation here.
Hey. Yeah, so I think last quarter
no.
free cash flow was 15% margin. Now it's 11.8% this quarter.
All right, so the net loss quarter over quarter went from negative 8.2% loss to 3.3% loss. So again, I'll still take it because their first quarter, the beginning of the year for them has always been bad, and then it gets better throughout the year. So now the first quarter is getting less bad, and now throughout the year is, I mean, again, they just crushed it on the quarter. I'm just talking like strictly net income EPS vibes.
Yep. So negative 13 million this quarter. That's a pretty big miss.
Yeah, negative 21.6 to negative 13.2.
Yeah.
Okay, so stock-based compensation went from almost 42 to 53.
Yeah.
I mean, that's
It declined as a percentage though by 1%, but I mean directionally it's still moving in the right direction.
Yeah. Overall, good quarter.
Great quarter.
Yeah.
I mean, they just grew 50%, so I mean, okay. Like
I don't.
I'll take
I
the
don't
1% year over year.
things, but I just don't like how they did not post their EPS. But I mean, it's fine. It's fine. It's up a
But
lot.
they don't do they haven't done that. They don't do that.
Why? Why not non-GAAP or something? I'm not going to complain. The stock is
I think
up.
they're trying to. I think like I mean, a lot of companies do that. They focus on the positives, and once they're consistently net income positive on a GAAP basis and EPS positive on a GAAP basis, and they'll post it. You know.
Well, I guess whoever played the earnings today is definitely going to do very good right now.
I mean, they're only up 5%, and I don't
What were
know
the options?
Yeah, I don't. I'm sure the market maker will find a way. I mean, honestly, honestly, 5-6% up with that type of implied volatility, you're probably not doing that great. Honestly,
Yeah.
That implied volatility was so high. I mean, for 2028, it was like 80-some%. I didn't really check for this week or next week, but I'm sure it was like 100-and-some%.
They're going to end this year growing like 42%.
That
Maybe
would be
even more.
freaking wild, man.
Yeah, I can see it.
That's why I think the market doesn't care as much about quarter over quarter, because like we're going from 50% to then 36% the next quarter, so it's about the full year. But I still think they're going for 37, but they're going to come in at like 41, 42 probably when it's all said and done, which is insane.
Yeah, free cash flow margin of 10.5. They actually slightly came down.
This goes as 11.8, bro. What's going on here?
Dude, your kid is going wild back there.
Back there, he's all the way in the living room.
That kid is loud.
Echoes.
You have a single floor plan?
No, it's 2-story.
Oh damn, that kid is that kid's probably played the earnings of some at the money calls.
He'd be losing probably. With that IP.
What am I looking at here?
Okay, so non-GAAP, they went from 22.3 to 35.4.
Wow. It's up 9% now.
Non-GAAP.
Trying to take a screenshot of this thing and it keeps on moving.
Bro, Nate might actually be right.
I told you guys $21 a share.
You dude was right.
Dude, that's why I stopped doubting you a long time ago.
You doubted Nate?
I always doubt him. And I'm always
Thanks,
wrong.
man. Hey, we just crossed 20. Just crossed 20. We're squeezing.
Did we really?
I'm trying to freaking take a screenshot here. Can this thing just stop for a minute?
2020, and now at 2020, it's up 10%. It's just going.
Oh my god!
It deserved, honestly.
Yeah, great earnings. I mean, it's also like Aria said, it's like a price to sales of probably 2.1 now, growing 40% for the full year. They're going to be doing it profitably. Free cash flow
What is that?
margins are going to end around 14-15%. Like, what are we talking about here? This is stupid.
Trying to take a freaking screenshot. It
So
keeps
they-
going
I
up.
just want
They're
the
in
two handles
line.
normalized.
They were in line with the gap of -6 cents. They met that, but then for non-gap, they beat by 1 cent, 13 cents.
Whoa, it's up. I just saw 12%.
Yeah.
Dude, I'm trying to take a stupid
10%.
screenshot.
This guy. Take it
I'm
now.
like, taking a screenshot. Dude, take a screenshot. Dude.
Listen, I'll take
Dude, that-
full
that-
credits for that, by the way. I've been spamming tweets. So the algo's definitely picked up on my tweets.
There you
Thank
go.
you. Thank you, sir.
There you go, Daria.
My mic's been muted this whole time. I feel like
Did you just call him Daria?
Yeah.
Hold on, let me.
I was wondering, Nick, I was like, dang, that dude hasn't talked in a minute.
Yeah, sorry. I was also making running some numbers here. I just made a post. Do you want to pull it up? I just sent it to you. It's about Q2 guide and the theoretical numbers that they could hit if we see something very similar to what happened this quarter with Marigold.
This guy's already on to the next quarter talking about theoretics. What is going on?
So
Already looking at next quarter.
So they guided 21% year-over-year growth for their core revenue and flat Marigold revenue for next quarter. If they beat Marigold revenues by the 17.1%, the same number that they did this quarter, that's a sorry. And then they beat their Q2 guide of 36%. They will hit a number of 428.1 million. That's 38.6% year-over-year growth without any core revenues beat factored in. So if they normally beat somewhere between, let's say that, conservative 3 to 5%, man, they could hit another 40% quarter in Q2. That
Talk
would be
to me
very
nice,
interesting.
Nick. Talk to me nice. I love to hear that.
Yeah, I'm
I
bullish,
It's
guys.
gonna finagle around that $20. That's gonna be a tough little area to break through, psychological level.
I do wonder how semiconductor is going to be tomorrow.
But now that SAS is getting the bid,
Yeah, this is a massive divergence. Like, SanDisk is only down 3% now, which is like not really much. But dude, Twilio 14%, Roku 9%, Atlassian 20%, Zeta's 10%. Like, this is a clear divergence right here, and they usually take turns. But as long as the market goes up, it's all good.
hey, if
Hopefully we
we
get, like,
cross over 2050 a share, we'll actually be positive year to date for Zeta, which would be like one of the only SaaS companies that's probably green year to date.
It's true.
Wow.
Yeah, I'm not gonna lie. I mean, this is one of the reasons why I own Zeta, is because its relative outperformance of other software stocks is pretty good. Like, if you compare Zeta to IGV, it is massively outperforming.
Did anybody know what they did for cash flow this quarter?
I
saw
did
it.
know it, and then
I
I
have it.
forgot it.
It's right. Free cash flow, $41.7 million. Margin was 10.5. So they have $300 million in their balance sheet.
That was 42 million.
Wait.
Yeah, 42 million. They have 300 million in their balance sheet. They are a $4.5 billion stock. So add 10% onto that. So they're about $5 billion divided by 3. I think they're actually, no, not so much that one.
Dude, I just got scared. I was like, oh no, the earnings call. But it's still not on.
Hey, don't play the music. You're going to get demonetized.
It's still not on. It's fine.
Oh, wow. Ronnie don't care.
I don't need the $50.
I'm trying to find this free cash flow.
I'm looking at
I
their,
can't find that number.
Instagram
Where's that
post.
free cash flow number? What slide is it on?
Oh, I
the
just
quarter, I
printed it
can't
out
find it
from,
either.
I'm down.
Is it
I'm
on
down
the-
here in
Is
the in the real numbers.
I've
Did
been
I
on
miss-
mute the whole time.
41.682, 10.5% free cash flow margin, down 0.2% year over year. Sorry, quarter over quarter.
Yeah, they
You guys
missed
see
free
the
cash
Reddit?
flow.
You can see the
48%
Reddit earnings as well.
year-over-year.
yeah,
7%.
Reddit
cash flow.
is doing pretty good.
30% net
6%
income
right now.
margin. Oof.
So free cash flow, you're right, went down about 20 basis points from last year. But I would say that's
Interesting.
still pretty good considering their massive growth. I mean, they're growing
I'm
like 50% year over year, and they're able to keep the free cash flow margin up that high. Like that's pretty phenomenal.
I'm so excited for 3 and 4.
Yeah, same here. Yeah, because they're guiding. They revised their full year 2026. This is interesting. Full year 2026 guidance midpoint. Free cash flow is now 235 million, and they just did. Ronnie, what did you say? 41 million.
Mm-hmm.
It's right here on the screen.
And they're going
41.62.
They're going to be delivering some big numbers to hit 235 million.
Oh
Yeah.
wow!
They're going to be massive numbers.
So that's why Zeta's pumping as well, just getting the SaaS pump.
IGV is up 1.75%, 7.5% right now. That's a big move for IGV.
I can't believe I would never have predicted that Atlassian is a market mover.
Well, all the software moves with each other, so yeah, it matters. Even ServiceNow is up right now.
6%. I mean, it's insane.
Yeah, a lot of these stocks are up.
Microsoft's still dead. It's getting replaced.
Well, it's up. It's
also
only,
like 4 trillion market cap.
Yeah, 50 basis points is a decent amount. Zeta is up 8%. Workday is up 5%.
Yeah, Workday's catching a random bit. I saw that earlier.
They're all going to all of software.
Matt Dow, you
Earnings
may
call
begin.
live.
Thank you, operator. Hello, everyone, and thank you for joining us for Zeta's first quarter 2026 conference call. Today's presentation and earnings release are available on Zeta's investor relations website at investors.zetaglobal.com, where you will also find links to our SEC filings along with other information about Zeta. Joining me on the call today are David Steinberg, Zeta's co-founder, chairman, and chief executive officer, and Chris Greiner, Zeta's chief financial officer. Before we begin, I'd like to remind everyone that statements made on this call, as well as in the presentation and earnings release, contain forward-looking statements regarding our financial outlook, business plans and objectives, and other future events and developments, including statements about the market potential of our products, potential competition, revenues of our products, and our goals and strategies. These statements are subject to risks and uncertainties that may cause actual results to differ materially from those projected. These risks and uncertainties include those described in the company's earnings release and other filings with the SEC and speak only as of today's date. In addition, our discussion today will include references to certain supplemental non-GAAP financial measures, which should be considered in addition to and not as a substitute for our GAAP results. We use these non-GAAP measures in managing our business and believe they provide useful information for our investors. Reconciliations of the non-GAAP measures to the corresponding GAAP measures, where appropriate, can be found in the earnings presentation available on our website, as well as our earnings release and our other filings with the SEC. With that, I will now turn the call over to David.
Thank you, Matt. Good afternoon, everyone, and thank you for joining us today. We delivered our 19th consecutive beat and raise quarter. This consistency is not driven by a single product cycle or a short-term tailwind. It is the result of a structural shift in the market. AI is no longer a feature. It is driving a replacement cycle where enterprises are demanding fewer systems, measurable results, and applied intelligence that works today. We are winning in this environment because of the system we have built. Proprietary data that improves with every interaction, intelligence that compounds with every decision, and a platform with AI at its core that allows customers to consolidate vendors into a single, unified operating system. This differentiated approach has been recognized by Forrester, where Zeta was once again named a leader, and also reflected in our customer advocacy with an NPS score in line with market leaders, up 23% from our assessment in the prior year. Both come on the heels of Forrester's study showing Zeta returns an average of 600% on marketing spend for its customers. Athena by Zeta is an accelerant. It is the user interface that brings AI directly into marketing workflows and removes the barriers to enterprise-wide adoption and impact. Signs of this were evident in Q1, with beta customers plus strong early adoption of Athena contributing to the revenue beat. Our first quarter performance once again shows we are the disruptor in the AI-driven marketing ecosystem. First quarter revenue of $396 million, representing year-over-year growth of 50% and up 29% year-over-year ex Marigold. Our fourth straight quarter of revenue growth acceleration, excluding acquisitions and political candidate revenue. And adjusted EBITDA was $66 million, up 42% year-over-year. 19 consecutive beat and raise quarters, combined with a 4-year revenue CAGR of 30%, reflect more than just consistency. They are evidence of sustained demand in a market consolidating around platforms that can deliver measurable outcomes at scale. And that visibility is reflected in our outlook. After raising the midpoint of our range for 2026 revenue guidance last quarter by $25 million, we are again raising it by $30 million, representing growth of 37%. These market share gains are evidence of a shift in the competitive landscape as AI moves from feature to a new way of doing business. Athena is designed to accelerate our share gains by bringing intelligence directly into workflows, turning answers into actions, and ultimately changing how marketing is planned, executed, and optimized. Athena is currently available to all of our enterprise customers, and its impact is already evident in sales pursuits and results. The number of Athena demos to potential new clients increased dramatically throughout the quarter. The promise of Athena is influencing decision makers and helping Zeta win deals as customers want to invest in applied AI, not roadmap AI. One new customer we closed in the quarter commented, "Leapfrogging to the future requires thinking differently today and committing to execution." Interacting with Athena made it clear that Zeta has already made this leap, bringing its vision to life and positioning us to accelerate into a fully agentic marketing future. End quote. Athena was a driver in one of the largest deals we have ever closed. The customer is a leading global apparel retailer operating across multiple brands, each with unique customers and over 3,000 locations worldwide. Zeta's platform was purpose-built to handle the complexity required by the largest enterprise companies, and this customer was able to consolidate down from 4 vendors to 1, Zeta. As the legacy marketing cloud replacement cycle begins to accelerate, this particular client was a marquee win. We are also seeing rapid adoption among existing customers. Early feedback and usage shows that customers view Athena not as incremental functionality, but as transformational technology. As adoption increases, Athena learns from more data, outcomes improve, and usage deepens, driving ARPU expansion and ultimately reinforcing the same flywheel that has powered our growth. That flywheel is powered by more than just Zeta's AI models. It's driven by the data and infrastructure behind them. Zeta's Supergraph, our proprietary identity and intelligence graph, unifies data across the enterprise and enables a complete deterministic view of the consumer that we believe is difficult to replicate at scale. This is translated. Our Supergraph was instrumental in a win with a leading online retailer of pet products in the United States that serves millions of active customers with a highly personalized e-commerce experience, a broad assortment of over 100,000 products, and a rapidly expanding ecosystem that includes auto ship subscriptions, pharmacy services, and pet health offerings. In addition, our proprietary data and the intelligence it generates was a key component in the expansion of a Fortune 100 telco client, expected to drive an 18 times increase in spend with Zeta in 2026 versus 2025. As Athena brings that intelligence to our customers in real time, the impact of this data advantage only grows. This foundation of data plus AI continues to power One Zeta. We are consistently seeing that the land, expand, extend model takes hold as customers begin with a single use case and scale across the platform over time. That expansion is driven by the modern CMO mandate: do more with fewer partners, improve ROI, and simplify execution across the organization. The result is larger commitments, deeper adoption, and a growing role for Zeta as the marketing operating system and core infrastructure. That momentum is showing up in the data. Super scaled customer ARPU was up 21% year over year, well ahead of our target range. Net retention rate remained above our target range of 110 to 115%. And the number of super scaled customers using more than one use case was up over 50% year over year at scale. It also creates a reinforcing cycle. Consolidation drives adoption, adoption drives results, and results drive further expansion. This is the One Zeta model, and it continues to be a powerful driver of durable growth. What stands out for me this quarter is the strength we are building across every part of the business. At the center of this is Athena, which is already beginning to change how our customers operate and how we compete. Together, our data, our platform, and our leadership in AI are positioning Zeta not just to participate in this shift, but to define it. As always, I want to sincerely thank our customers, our partners, and our shareholders for your continued support of our vision. And to Team Zeta, thank you for everything you do. It was an honor to be recognized as a Great Places to Work for the third year in a row. This is a reflection of your hard work and collaboration. Now let me turn it over to Chris to discuss our results in greater detail. Chris?
Thank you, David, and good afternoon, everyone. Our results once again demonstrated the durability, predictability, and profitability of Zeta's growth. Revenue growth, excluding acquisitions and political candidate revenue, accelerated for the fourth consecutive quarter to 29% in Q1, further cementing the durability of our growth and market share gains. Broad-based strength across the business is resulting in improved visibility, leading us to once again raise our 2026 outlook, underscoring the predictability of our growth. Even in doing so, we're maintaining our typical conservatism. And we also saw free cash flow conversion improve to 63%, generating $42 million in free cash flow, demonstrating the increase in profitability of our growth. These results surpassed even our internal stretch goals, coming in $26 million or 7 points above the midpoint of our revenue guidance for the quarter. As I analyzed the strength of our quarter, what stood out was how balanced the upside contribution was. It was not one or two isolated benefits. Instead, in baseball parlance, it was a lot of singles and doubles, which in my opinion is healthier. Here are some examples. In terms of revenue growth, excluding Marigold's contribution, approximately 14 points of growth came from existing customers and 15 points from new customers. From an industry lens, 9 out of our top 10 industries grew faster than 10%, with more discretionary industries continuing to be at the upper end, demonstrating why in tougher macro times, data-driven, lower marketing funnel, high ROI attributable marketing is paramount. And finally, as it relates to how customers use our platform, email, connected TV, mobile, and social all grew double digits, all while each use case, acquire, grow, and retain, also grew double digits. Now let me dive deeper into our KPIs, income statement, and balance sheet. Total super scaled customer count grew to 189, up 19% year over year, and an addition of 5 customers sequentially. This exceeds our Zeta 2028 model of 4% to 8% super scaled customer count growth. Super scaled customer additions were especially strong in advertising, marketing, travel, and hospitality. Super scaled customer ARPU was 1.7 million, up 21% year over year. This also exceeded our Zeta 2028 model of 12% to 16% ARPU growth. Strong ARPU growth in the quarter was driven by an increase in the number of customers using multiple use cases, which was up over 50% year over year, as well as customers using more than 3 channels, which increased 40% year over year. Both are great examples of the One Zeta sales motion working and how Athena can unlock more of the platform's capabilities for our customers to use. The forward-looking sales pipeline is also robust, going into a season when Athena will be front and center at multiple industry conferences. In fact, Athena demos were a crucial differentiator versus incumbents and RFP competitors in each of our marquee enterprise and agency wins in Q1. And we expect Athena to play an even bigger role in adding to the sales pipeline, which is already up 40% year over year, with a subset of discretionary industries up even more, those like retail, advertising, travel, restaurants, furniture, and resorts, to name a few. This outsized sales pipeline growth in discretionary industries is consistent with what we've seen in previous periods of macro volatility and is another proof point that in times of uncertainty, customers consolidate onto fewer platforms that can drive measurable ROI with AI-driven efficiency. Now moving on to revenue mix, direct revenue in the first quarter was 75%, above the 73% last year and in line with our target of 70 to 75%. Our GAAP cost of revenue in the quarter was 41%, a 190 basis point increase year over year and 50 basis points sequentially. The increase in cost of revenue was driven by new agency wins, driving a higher initial mix of social as a channel. This is consistent with the pattern of business we've seen and spoken to previously when new agencies platform onto Zeta. This is because we offer a substantially more efficient and effective solution for social and has become the first of many channels adopted by new agencies as they migrate. As new agencies scale over time, not only does their aggregate spend increase, but they do so by adding Zeta-owned channels like email, display, video, mobile, CTV, and others. It also bears repeating, while social has a higher cost of revenue, it is still accretive to both adjusted EBITDA and free cash flow margins. Further, social drives high customer stickiness as well. In the first quarter, adjusted EBITDA was $66.1 million at a margin of 16.7%, 100 basis points lower year over year and $5 million better than the midpoint of our guidance. Marigold integration is progressing rapidly and tracking ahead of our expectations. We took aggressive steps in the quarter to execute operating synergies, which should begin to benefit our adjusted EBITDA margin in Q2 and into the back half of the year. At the same time, Marigold's revenue came in better than we anticipated, and we're seeing encouraging traction from a One Zeta approach of cross-selling Marigold's loyalty product along with Zeta's grow and acquire use cases to the combined customer base. Another area we spoke about last quarter was becoming GAAP net income and EPS positive for the full year of 2026, specifically generating between 2 and 4 cents of GAAP earnings per share. Our first quarter results have us pacing toward the high end of that range. In Q1, our GAAP net loss was $13.2 million, an improvement from a net loss of $21.6 million in the first quarter of last year. GAAP loss per share was 6 cents coming in ahead of our expectations for the quarter, with forecasted costs related to the integration of Marigold being the primary driver and not seen as recurring over the rest of the year. First quarter net cash provided by operating activities was $49.7 million, up 43% year over year, with free cash flow of $41.7 million, up 48% year over year, and representing a margin of 10.5%. This represents a free cash flow conversion of 63%, a 270 basis point improvement from the first quarter of 2025. This also includes a roughly 13-point working capital headwind driven by longer agency payment cycles, standard for their industry. During the first quarter, we repurchased 1.5 million shares for $25.7 million and have approximately $138 million remaining on our share repurchase authorization. We expect to remain active buyers of our stock, especially at these price levels, subject to market conditions and other priorities. And we continue to make significant progress in reducing dilution and stock-based compensation expense. Excluding Marigold, our dilution in the first quarter was 0.1%, and we remain on track to achieve our normal course net dilution target of 3% to 4% in 2026. Relatedly, with most of management's previously issued equity now fully vested post-IPO, Zeta's board of directors and compensation committee, in consultation with an independent compensation consultant, approved a new long-term equity incentive plan for management. This performance-based plan secures continuity of Zeta's named executive officers and management for 6 years and incentivizes management to achieve its long-term revenue and adjusted EBITDA margin objectives while adhering to its principles of lowering dilution, reducing stock-based compensation as a percentage of revenue, and achieving GAAP positive earnings. Furthermore, named executive officers who receive these incentives will not be rewarded any further equity for the next 6 years. Now on to our increased guidance. For the full year 2026, we're increasing the midpoint of our revenue guidance by $30 million to $1,785 million, representing a 37% growth rate or 22% year-over-year growth when excluding Marigold and political candidate revenue. None of our guidance increase is related to political candidate revenue, which we continue to assume will be $15 million in 2026, with $7 million in the third quarter and $8 million in the fourth quarter. Additionally, we continue to take a conservative view of Marigold, contributing $47.5 million per quarter to 2026 revenue for the remainder of the year. Our revenue guidance also includes minimal contribution from Athena, and as shared earlier, we have taken into account our typical conservatism of 2% to 5% in setting our outlook. For the second quarter, we now expect revenue of $420 million at the midpoint, $4 million higher than our previous guidance, and representing year-over-year growth of 36%, or 21% when excluding political candidate and Marigold revenue. For adjusted EBITDA, we're increasing the midpoint of our 2026 guidance to $397 million, up $6 million from our prior guidance, and representing a year-over-year increase of 43% at a margin of 22.3%, an improvement of 90 basis points over 2025. For the second quarter of 2026, we now expect adjusted EBITDA of $86.6 million at the midpoint, up from our previous expectation of $84.9 million and representing growth of 47% and a margin of 20.6%, up 155 basis points year to year. We are also increasing our 2026 free cash flow guidance to $235 million at the midpoint, up from $231 million, representing year-over-year growth of 43% and a conversion of 59% of adjusted EBITDA, which likely has upside. And here's the broader point. A 19-quarter beat and raise track record is obviously something we're proud of and continues to demonstrate our consistency and strong execution. We also recognize the times we're in, specifically the need to underwrite investments in companies with strong free cash flow generation, durable revenue growth and share gains, and demonstratable moats. Q1 was an excellent jumping off point for these emerging investor frameworks. Not only did free cash flow set a record in the first quarter, but we are also tracking to the high end of our 2026 GAAP EPS range of 2 cents to 4 cents and long-term 2028 targets. As it relates to durable growth, this was the fourth quarter in a row we accelerated revenue growth, excluding acquisitions and political candidate revenue. And in terms of exhibiting our moats, our marquee wins with enterprises and agencies this quarter came at the expense of legacy marketing clouds and legacy DSPs, where Zeta's proprietary data and Athena operating system were capabilities our competition could not match. With that, I'll hand the call over to the operator for David and me to take your questions. Operator?
Operator's having trouble.
Nate, what'd you do?
It's always Nate's fault.
It's being run by Athena. Hopefully not, though.
Oh, that's
All right.
anticlimactic.
Roblox is not doing good.
In the gutter, eh?
Yeah, this is like a Duolingo, basically.
What happened? I didn't even look at the earnings yet.
Second sequential quarter of declining global DAUs. That's it.
Yeah, that'll do it.
How about that 6-year options for the big boys at the top?
Oh, I didn't realize they raised debt. Jeez.
The Roblox or Zeta?
Sorry, Roblox. Wait, you talking about Zeta?
Yeah, I'm talking about Zeta on the Zeta live stream.
My bad.
The 6 year.
Guys, what happened?
Cut out.
Or what? It's on. They brought
Ladies
in
and
the.
gentlemen, thank you for standing by.
Oh, there we are.
Oh, there we go.
Hold on just 1 second, please. We will now be conducting the question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press star 2 if you'd like to remove a question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. And the first question comes from the line of DJ Hines with Canaccord Genuity. Please proceed with your question.
Hey guys, congrats on a fantastic quarter. Nice start to the year. David, I want to ask you a competitive question. So obviously there's been more public backlash against the trade desk and the agency ecosystem, but I think for those living in the marketing and ad tech world, like that's been going on for a while now, right? So 2 related questions here. Number 1, like how much do you think Zeta has benefited from that dynamic? And then second, if the trade desk figures out how to get pricing right, or at least make it more transparent, does this rebalance competitive dynamics at all, or is the horse already out of the barn there?
Well, first of all, DJ, thank you. I appreciate it. Could not be happier with this quarter. And I think it really speaks to kicking off the year right. And Athena really was a massive driver here. I want to separate the conversation about the agency and other technological platforms like the trade desk that are out there and struggling a bit, because the agencies continue to thrive and they're not really having any issues from our vantage point. And I just got back from 3 days at the Possible Conference, where I did 54 meetings in 3 days, hosted 4 dinners and 3 cocktail parties, which is why I'm losing my voice going into this. I think that, and I don't want to speak to any particular platform, but I think the horse is out of the barn. I think that organizations that have built workflow management tools that do not have proprietary data, they do not have proprietary native artificial intelligence, are going to really struggle in this next evolution of where sort of marketing is going as it relates to intelligence. Because if you're not creating intelligence in today's world, you're not winning. And I think that we are a direct reason that a number of our competitors are either growing slower or shrinking as we take meaningful market share. Chris, in his prepared remarks, was very clear about the fact we had a number of meaningful agency wins in the quarter that will continue to run out through the rest of this year and into future years that are starting with social. We're starting to see those move over to programmatic and connected TV as well. So I think if you separate the agencies, which are doing well and thriving, from the technological platforms that have based their business on workflow management, I think they are going to struggle, and we are going to continue to beat them handedly in the marketplace.
Yeah, perfect and helpful color. Chris, I want to follow up with you. So David gave a bunch of great anecdotal data points around Athena and the early success there. The product's not explicitly monetized, right? So what are the signs that we all as investors should be paying attention to from a financial perspective that will signal to us that Athena is moving the needle for Zeta?
Great question, DJ. I'm glad you asked. There's a couple of leading indicator data points that I think you can already begin to look at. So as part of the press release, one of the data points that was called out was a 7x increase. And this is just in the first week of Athena's general availability. We saw a 7x increase in the amount of agentic interactions on the platform, coupled by 60% of the AI usage on our platform being driven by Athena. How that should ultimately translate through the usage part of a revenue can be seen through ARPU expansion, some of which you already started to see. So if you look at ARPU in the quarter for super scaled customers, it was 1.7 million. It was up 21% year over year. But if you look underneath that, what drove it are exactly the dynamics that Athena was engineered to be able to do, which is to make more of the platform available and visible for the customers to be able to exploit. If you look at multiple use case customers, it was up over 50% year over year. If you look at the customers that were using 4 or more channels, that's up over 40% year over year, which again are not just great examples of Athena as an unlock, but also One Zeta working well.
And by the way, she's just getting started, DJ.
Yeah, totally. Awesome. Congrats, guys. Thank you.
Thanks, DJ.
And the next question comes from the line of Gabriela Borges with Goldman Sachs. Please proceed with your question.
Hi, good afternoon. Thank you. David, I want to ask you about the people and process part of Athena, meaning the technology you've demoed, it clearly is able to do a huge amount of knowledge work. My question for you is, how do you then change the end user behavior? What does the training and enablement look like? How do you encourage more people to use it once your customers have already decided to adopt it?
First of all, Gabrielle, what a great question. First, let me say that we were incredibly proud that we were able to make the product not just generally available on time, but available to 100% of our enterprise clients, which was not a small task. At the same time, to your exact point, we have a learning and development group that is literally purpose-built to train our clients and get them up and running on this new product. And they've already done our top 30 clients have been onboarded through that group, and we're going to be adding all the other clients as we continue to expand out. The other thing that's really important is we're doing a weekly learning and training program to all of our clients that's virtual, recorded, and they're able to then watch it at their convenience inside of the platform when they want to. But we're doing sort of a Ask Athena question of the week. Every week, a new question that you could ask Athena goes out to all of our customers so that they can begin the process of using her. And I'm sure you've seen the demo. You know how incredibly intuitive she is to use. So what I would say is we're really focusing on it from a relationship management, learning, development, both in person, virtually, and weekly follow-ups. But the intuitive nature of her is, I think, one of the reasons you saw her so powerful. Just in the first week she was live, Athena drove 60% of all AI utilization across our platform. That is off the charts for a new product from an adoption perspective.
Very good. And Chris, the follow-up for you on inference cost. So Athena has pieces of Zeta proprietary technology, and then I believe you have some third-party technology in there too. How do you think about managing those inference costs or optimizing those inference costs? And then same question for your R&D team, your engineering team. We're at the stage where, we've been through more token usage is generally better, but also can sort of outrun budgets very quickly. How do you think about managing that internally?
So, Gabrielle, I'm going to take that one. Sorry,
Yeah,
Chris.
please.
First and foremost, as the world moves from large language models to inference-based AI, our platform is purpose-built for that as the operating system and infrastructure for our clients. The vast majority of our queries, Gabriella, are done on our own platforms, on our own data. So we are not buying tokens as we roll this out to our customers. It's fully embedded, which is one of the reasons I think you're seeing us project substantially higher growth to profits and cash flow than we are even to revenue. We have put ourselves as sort of the perfect spot as the market moves to inference-based AI. As it relates to our internal consumption, we have built a platform called Spade. Don't ask me what it stands for. It is an anagram, but the reality is that Spade is a tool that we custom built inside of Zeta and is being utilized by a very large percentage of our engineering team, where effectively an engineer would go into Spade. They would create the construct for the code they're trying to develop. Spade would then automatically choose the most efficient and best large language model to do the coding itself. So if it's security-based, we might choose Claude. If it's general coding-based, Spade might choose ChatGPT. If it's complex publishing, Spade might choose Gemini. Now, of course, Cursor is sort of at the center of this as we think about where that's expanding. The code is then auto-generated by the LLM, which is the only time we utilize tokens. Everything else is sitting on our own platform, our own cloud. The LLM creates the code. It then goes to a program called Zippy, because obviously we have great nomenclature capabilities. And Zippy automatically QAs the code on our platform once again. Once it's done, it sends it to one of our senior architects. They review the code one more time, and they can make it generally available. To put it in perspective, Gabriella, at the end of the first quarter, Zeta was already driving 75% automated new code creation. I believe that puts us even above Google as it relates to that. And the pods working on Athena today, I know for a fact are up from a productivity perspective between 400 and 600% year over year from an output and productivity perspective. All the while, the vast majority of the compute and of the tokenization is on our own platform. So as you look at our growth, we will not experience some of the constriction of margin or additional CapEx. We've already allowed for everything in the projections that we've got, and we're very, very comfortable with where we are externally and from an engineering perspective.
Helpful details. Thank you.
And the next question comes from the line of Arjun Bhatia with William Blair. Please proceed with your question.
Perfect. Thank you so much, and congrats, guys, on a very strong quarter here. David, I have two questions. I think maybe I'll just do them one at a time. The first on awareness. It seems like the customers that are using it are getting great value out of it. It's early, but for this to have a material impact for the company as a whole, you have a fairly large revenue base. Like, how do you roll this out to all your large customers? Where is it right now in terms of customers having awareness and knowing, what Athena can do, and how do you sort of plan to progress that?
Yeah, so great question, Arjun. First of all, from an awareness perspective, I would say that our marketing team today is doing the greatest job it's ever done in the history of our company. I just came back from the Possible conference where you couldn't walk 5 feet without seeing the brand Athena and without seeing Buy Zeta. And it was really exciting. We did an Athena suite. We did a Zeta cafe powered by Athena. And we're starting to see that we're moving to that next evolution of our brand where it's sort of moved to, it's getting the must-have Zeta in our industry. And I didn't think I would say that this early. As it relates to internal awareness, we have built an internal learning and development team, which is doing nothing but training and onboarding our clients. One of the things we're going to be rolling out in the next few months, which I'm super excited about, is an Athena certification. We're going to certify the individuals who work for our clients on Athena utilization. They'll get a full certification that they can put into their resume, and we're very excited about how that's going to be rolling out. So, but we're also doing sort of a hint of the week, tip of the week, question of the week. It's going out to all of our clients. I would tell you, in all of the years I've run this company, which is a long time now, I have never seen a faster uptake of a technological product that we've rolled out, and it's really been exciting, Arjun.
Awesome. That's great to hear. And then maybe switching gears from Athena for a second, Marigold, that also looked like it was off to a strong start. I think you beat your sort of Q1 target on that front. But where are we on the cross-sell there? And what's the early traction you're seeing on, I guess, the two-sided cross-sell, both into your base and into Marigold's base?
Arjun, I'll take that, and David will wrap it up also. So a couple places where you can see where it's evident that the cross-selling is working. So we talked about the number of multi-use cases. It's nicely contributing to the growth that we've seen across the base of super scaled customers. But I think more broadly, if you look at the areas that we talked about being purposely conservative around Marigold, it was around the potential for their SMB and mid-market customers that were on the enterprise platform. We anticipated churn. We're not seeing as much as we thought, which is good. There were products that and geographies that we thought we would have less growth on and would also see churn. That hasn't happened yet. And then just more broad normal churn at the enterprise level, and it's stayed healthy. And by the way, a lot of that is being driven by Zeta's interactions with those customers and partnering with Marigold's people. So it's been really interesting, Arjun. We've seen a meaningful uptick from existing Marigold clients with us integrating the data cloud into the platform. So the first thing we did, and we had it done within 90 days, was a full data cloud integration into their platforms, which allowed clients to begin to access data sets that they've never had access to before. So we've seen meaningful growth there. As it relates to cross-selling, we're making progress, but not a lot of that is in the numbers yet. These products are complicated and they're very big. I think you'll see more of that as the year progresses, but I mean, to say we're very excited about how well we're performing with the asset would be an understatement. And a lot of that today is a result of the data cloud integration. Now, whether you want to consider that a cross-sell because we're bundling the data cloud in to drive additional utilization or not, that's up to you. But to us, as we're rolling out loyalty to all of our global clients, and we're starting to take sail through and roll it out to the live intent clients and all of the different things we're doing, that's in the early stages, and I think will drive meaningful growth in the future.
Very helpful. Thank you both.
And the next question comes from the line of Jack Nichols with KeyBanc Capital Markets. Please proceed with your question.
Hey guys, thank you for taking the question. Maybe pivoting back to Athena, I was wondering if you could walk us through the early adoption trends among the enterprise customer base, specifically around how they're deepening engagement with the platform and then existing use cases today. Then I've got a quick follow-up.
Well, first of all, welcome, Jack. It's great to have you on coverage. We really appreciate you. Second, we have been really blown away by the early adoption of Athena. We made it generally available to 100% of our enterprise clients, and we saw a 7x increase in agentic interactions from our clients in the first week of Athena alone. So, we think of that as pretty good. 7x is always something we aspire to. But our long-term goal is for Athena to be the operating system of our clients' businesses. And we're just getting started on that. But early adoption has been very, very exciting.
That makes sense. And then pivoting quickly to Marigold and thinking about the recurring revenue mix, as those customers, adopt the Zeta platform, should we expect that mix to trend down or up over time, or kind of remain in line with the 2025 60% expectation disclosure?
Hey, Jack, it's Chris. I'll take this. And as David said, welcome. It should go up is the short answer. And I think a really interesting proof point that you'll see in the queue tomorrow is just how substantially RPOs went up quarter to quarter. They went up $66 million just from fourth quarter to the first quarter. Obviously, part of that is Marigold, which then helps with visibility. But I think an interesting thing for the audience here to understand is another large piece of that was not only these marquee wins that we talked about with the apparel retailer and the e-commerce pet retailer, but it was also agencies beginning to now also sign long-term committed contracts. That is an exciting proof point for us. It adds to the recurring revenue, which then obviously adds to visibility, which both of those came into our confidence in being able to raise the guidance that we did on the top line by 30 million while continuing to keep to our 2 to 5% conservatism.
Wonderful. Thank you, guys.
And the next question comes from the line of Clark Wright with D.A. Davidson. Please proceed with your question.
Awesome. Thank you. I wanted to maybe quickly touch on the consolidation story. You noted on one of the marquee wins this quarter that you consolidated 4. And I recognize over the course of the last few quarters, you mentioned consolidation being a key piece. Can you talk about the use cases that Zeta continues to solve for and how you see that expanding over time?
Yeah, thank you, Clark. Listen, when John and I founded this company, 18, 19 years ago at this point, our vision was to put everything a marketer needed into one user interface with one reporting infrastructure. And I would tell you that because of Athena, I think we are finally there. And our ability to consolidate anywhere from 8 to 12 different vendors into one user interface and one reporting infrastructure has never been stronger. In the case of this global company, because it's a retailer and a manufacturer of their clothing, we displaced what I think many people think to be certainly the longest serving of the marketing clouds. They made, I think, their acquisition first in the space as they built their marketing cloud. And in fact, this particular client used that company for everything. They considered themselves a shop, so to speak. So decoupling their marketing cloud from everything else they were doing, I think, was a very difficult decision. We also displaced another competitor of ours who tends to be more focused on mobile. They tend to be a little easier to displace because they're so singularly focused on mobile. And neither of those companies brought any data or any activation capabilities to task. When you're working with one of the large marketing clouds and you displace them, you're almost always also displacing a professional service provider who they have to then spend millions of dollars on to customize their platform versus our platform is pretty much ready to go from a cloud perspective. So that would be a really good example of and we see this as one of the most important wins in our company's history. And it goes back to not just our ability to consolidate other vendors, but to do everything that each one of those point solution does better than they do while simultaneously putting everything into one place.
Got it. That's helpful. And then if I could just add one more, over the long term, you talk about increasing wallet share with customers. Do you think AI accelerates the rate of share capture, increases the total wallet share, or both?
I think both. I mean, remember,
The single greatest way, Clark, to get market share is drive meaningful return on investment to your clients. The Forrester study that came out that said we have a 600% return on marketing spend, we're seeing early adopters of Athena at a materially higher return on investment than even that. The higher we drive return on investment, the more wallet share we're naturally going to get. And as you know, our existing global super scaled customers will spend well over $100 to $110 billion on marketing this year. And at the middle of our range, we'll have, call it 150 to 170 basis points of wallet share. I believe we can get that to 700 to 1,000% of their wallet share in the years to come. The key will be driving better return on investment. Artificial intelligence, specifically Athena, plus our data as a moat into our business is going to drive return on marketing spend up meaningfully, which we think will then drive wallet share.
Got it. Thank you.
Our next question comes from Jason Kreyer with Craig-Hallum.
Thanks, guys. Great job. So I wanted to stick with the point on wallet share because you announced some major wins and you've announced some major wins over recent quarters. But I'm curious, when you look at the aggregate data representing somewhere less than 2% of wallet share, well, how big of deals are you winning today, and how big of deals do you think you can win over time, just in terms of the wallet share of those customers?
It's interesting, Jason. I would say the last few wins we've had have been at a comparable wallet share to our current wallet share, but the clients are spending 4 or 5 times as much per year on marketing and CRM. So they represent some of the largest deals we've ever done right out of the gate. Does that make sense just mathematically? At the same time, what we're starting to see is some of our clients who've been on the platform for 2, 3, 4, 5 years are getting to that 7 to 10% of wallet share and higher. And we're using that as a roadmap for how do we take new clients there. So the wins are much bigger than they've ever been, but I'm not sure they're much bigger wallet share only because the companies are so big that we're winning. Now, that'll give us meaningful upside as they're on the platform, and Chris does a much better job than I do talking about how ARPU grows the longer a client is with us, and these clients are starting at probably the highest ARPU we've ever seen clients starting.
That also jives, Jason, with our sales pipelines. We talked about its growth, but if you look at deal sizes in particularly, and the annual contract value of deals are up pretty substantially year over year.
Perfect. Maybe one quick follow-up, David. You've been doing AI for a long time, but it seems like the release of Athena has certainly put you in a different conversation within the AI industry. So I'm curious, how has that translated to conversations with customers? And do you feel like Zeta is becoming more of an AI thought leader in the marketing ecosystem, and that's driving that engagement?
It's interesting, Jason. In some ways, being a native AI company has been complex for us over the last few years because everybody's rolling out shiny new products, most of which are not real, but most of the people are rolling them out. And we've always been seen as sort of like AI is under the engine. Athena is the hood ornament to what we're doing as a company. She is now us announcing ourselves with authority that we are not just an AI company, we are the leader and the disruptor in the AI space. And with the launch of Athena as a marquee product, it has changed the game for the way people are seeing us. And I will tell you, the 2 client wins we talked about in the prepared remarks, there is 0 chance we would have been in the room if we had not launched Athena or started talking about her at Zeta Live. And there's, I don't think, a chance we would have won these accounts without Athena showing that we are the leader in artificial intelligence as it relates to marketing. From an internal perspective, we're also one of the best users of AI. I mean, back to what I was saying around the Spade internal platform we built, If you had told me a year ago we'd be auto-generating 75% of our own code while simultaneously driving the type of quality products we're driving, I would have said that's just not possible. Spade has made that possible. And it's really been very interesting how we've done that in an environment where we're still using a very de minimis percentage of tokens versus what many of our competitors are doing, which is going to allow us to continue expanding our operating margin as we've done over the years.
Thank you, David.
Our next question is from Matt Swanson with RBC.
Yeah, great. Thank you guys for taking my questions. And I'll have my congratulations to the quarter. I think the metric that really jumped out to me was the increase in multi-use case. And I know that's something that we had kind of talked about with Athena and its ability to kind of create this organic expansion motion. Given that 50% increase was for the full quarter, like, is Athena a real part of that? Is there other parts of your go-to-market driving that? If you could just kind of touch a little more there.
The great news is Athena's just getting started. So we had a great trajectory going into our launch. Now, I will tell you, every client that was on the beta became multi-use case. So it was, but that was not a lot of clients, right? So as she rolled out to generally available, we saw an uptick there, but I think that's continued upside to growth in multi-use case. And, the One Zeta team continues to just do an exceptional job. I'll remind you, Matt, we really started on the One Zeta mission, just 18 months ago. So you've got a massive tailwind coming out of the work we've been doing there. And then I think Athena is going to supercharge that.
And Matt, I think the reason why you picked up on it, but for others, empirically, what we know is that when customers use more than one use case, their ARPU is 3 to 5 times greater. So I think you're right on that being an exciting data point.
Yeah, no, I appreciate that. And we'll make sure to take note that 100% of Athena users will become multi-use case. That's what I heard.
Well, I wouldn't go quite there. I mean, obviously that's the goal, Matt, but we certainly didn't say that just yet.
Yeah. I get the other one I wanted to talk about is the independent agencies. I know you called out advertising as a key vertical for you guys. I think your willingness to kind of share the credit with agencies and allow them to white label some of your technology has been part of the reason you've been so successful there. I guess with Athena, how much more can that help you in those deal environments, as a lot of these, independent agencies are trying to compete with the big holdcos and so on?
One of the key wins we had, Matt, in the quarter was with a large independent. If you look at business done a year ago with them was 0. Business done within this quarter was 8 figures. With Athena being again something that was visible to them as something they could also exploit for their benefit. The same was true with a very large new agency that began piloting Zeta in 2025. Spend was material, call it a little less than $2 million. But that new agreement that was signed is more than 10x that size. So both the independent as well as the large agency continues to have a lot of runway. In fact, amongst the 5 large holdcos, the number of brands we're working with year-over-year grew by 50%.
And I just want to say, Matt, we're actually big fans of the agencies. They provide incredible services to their clients. And we've had clients approach us to go direct. And, we always try to bring the agency back into it because we think it's a very healthy relationship when it's the 3 of us. And listen, we're good if the agencies, make their money because they're providing meaningful services. But as it relates to our business, I'll remind you, none of the agencies really focus on the retain, which as of last quarter is about 60% of our business. So we have real greenfield opportunity there as it relates to the activation, which sort of create customers, monetize customers. We're very, very happy to partner and give the credit to the agencies because they've built incredible businesses, and we're very excited now to be working with pretty much all of the large holdcos. I think now it's all, certainly the biggest ones. And then to be partnering with a select number of independent agencies. There's a lot of them out there, but we want to work with only the best.
Thank you.
Our next question comes from Naved Khan with B. Riley.
Hi, this is Ethan Waddell calling in for Naved. Thanks for taking my questions. To start, can we talk about the ideal customer profile for Athena? I'd imagine there are two kind of distinct value propositions there. A, where Athena can drive efficiency gains for your larger enterprises that already have, sophisticated marketing teams and whatnot. B, more small and mid-market players where Athena creates access to capabilities that these customers don't necessarily have in-house. So, which of these is management really seeing more of early traction-wise, and what's kind of the ideal customer size that you're leaning into with your early, sales motion?
Well, it's interesting you put it that way. I mean, today, to be honest, Ethan, we don't focus on mid-size. We're really just focused on very large enterprise. Although Athena opens up the mid-size market to us at some point, because you're very intuitive to understand that the cost of layering Athena out to mid-sized companies is so de minimis to us that would allow us to move into that vertical, or I'm sorry, into that sort of category without having to meaningfully hire people to do it. But today, we focus solely on very large enterprise. So I would tell you the two things very large enterprises have really focused on is A, and you're totally right, efficiency. What they're finding is it takes 70% less labor to manage the Zeta marketing platform with Athena than it did with hands-on keyboard. So you're effectively able to take 70% of your marketing workforce and retask them into other functions where they can be more valuable to your organization. We're also seeing that because, and this is something I talk about a lot, Ethan, but when you buy software, whether it's us or it's Bloomberg or somebody else, you're buying a stealth fighter, right? We're all spending to build a stealth fighter of a platform. And most of our clients know how to fly a Cessna. Think about a Bloomberg terminal. The vast majority of their customers only use 5 to 10% of the capabilities. As you look at our platform, being able to fly that Cessna, we're still delivering a 600% return on marketing spend. As clients are able to use Athena as their co-pilot, they can get right into the cockpit of that stealth fighter, and they can then fly the entire platform, which is driving meaningfully higher return on marketing spend than even that 600%.
Got it. That makes a lot of sense. Thank you. And then, coming out of first quarter, I think you mentioned 9 out of 10 top industries grew more than 20%. I know you spoke to some customer consolidation being a benefit there, but are there any verticals that you see showing any signs of softening, particularly anything sensitive to the macro and geopolitical risk going on right now on the consumer discretion?
Yeah, short answer, no, Ethan. The 9 out of the 10 were effectively the same 9 out of 10 that ended last year. The 1 out of 10 that wasn't growing over 20% is 4% of revenue. So it really gives you a sense for the vast majority of revenues on all of the verticals we support are performing in a very healthy way.
Got it. That's really helpful. Thank you.
Our next question is from Terry Tillman with Truist.
Yeah, hey, thanks for fitting me in. Hi, David, Chris, Matt, and hi, Athena. I'll just keep it to one question because I know we're running over time. And maybe I'm getting too far ahead of myself, but I like hearing about 40% increase, 40% plus increase in the sales pipeline. And I think you said your discretionary markets where you have a lot of activity is even higher. Is it too early to start to say, because of the emphasis on agentic and AI in general that's in the market, plus you have Athena that's now credibly in the market and in production, could it start to tip the scales and move in some of this funnel activity faster and you actually close new deals quicker? Or is it just too early, or I'm just way too optimistic?
I don't think you're too optimistic, but I do think it's from an expectation setting perspective, and frankly, from a data-driven perspective, and this is a multi-quarter statement I'm about to make, our deal cycles in good times and in less good times have stayed consistent. What we're seeing is more opportunities in RFPs, many more at-bats than we were given a year ago and certainly 2 years ago. Those by nature take longer. But again, our strategy many times is to work around those processes through pilots and proof of concepts. Those deals are getting bigger, as David said. So, yesterday's 100K pilot is today's $1 million. But I wouldn't say right now it's an accelerant, but it's in addition to the pipeline.
And I would concur. But, I do want to be clear, Terry, we're getting at-bats that we would have never gotten a few years ago. So it's working really, really well.
That's great to hear. Thank you.
Thank you. This concludes the Q&A session and our call. You may disconnect your lines at this time. Have a wonderful day.
Of course, he had to make the Cessna analogy.
I know.
Every time.
He can't help himself, dude.
It was a good call.
Wow.
I liked a lot of Athena questions there. Good.
Can you summarize it for me? I wasn't really paying attention.
No.
Yo, Apple just released guidance for next quarter as an acceleration. They went from down 1% to up 3%. And the market is very much up right now.
Sorry,
That's
repeat
right.
that. What'd you say, Sam?
Apple released guidance. So they were down 1% and now they're up 1.5%. Their previous guidance, the current quarter was 16% growth. Next quarter is 13 or 14% growth. So according to Fiscal.ai, which is Aria's God platform, usually their revenue, hold on, it takes a minute to pull up. Aria, what's happening here? All right. So for next quarter, so last year they grew at 9.6% for the same quarter last year. This is Q2. And then they're expecting 13 to 14% growth, which they're likely going to be. The stock is up 4.5%. Hopefully this stays and it'll be a green day. QQQ is up 23 basis points after hours.
Yeah,
that's good news.
Up a little bit too after hours.
That's good
really
news.
Good news for the entire freaking market, dude.
Mm-hmm. Mm-hmm. So, guys, how do we feel? How do we feel about Zeta? Let's start at the top. Ronnie, how do you feel, buddy?
I thought it was great. I thought they crushed every single metric, and then to come in line with the non-gap at 6 cents, but then do 50% of year-over-year revenue growth. I thought it was amazing. I think they deserve to be up more. I think we'll probably stay around here and then probably end this week like chopping or probably like a bunch of meh just due to option markets, and the market maker likes to screw people over with their options, especially earnings options, because they're gambling. And then next week I could see Zeta make a really strong climb 20, 21, and then weeks and months to come, as long as this market starts to rotate a bit, starts to give some of these SaaS companies, even if not all the SaaS companies, some of them start giving them some love and continue to climb. I did like this quote thread on Zeta about a bunch of different, quotes and things that they said during the call. The 600%, we already know that, but the rule of 67, that's amazing. For a rule of 40 score, 50% revenue growth, we already know that's amazing. This was pretty crazy. Athena accelerates that system as the core operating system that brings AI directly into workflows and removes the barrier to enterprise-wide adoption. Zeta is the disruptor in the AI-driven replacement cycle. That is, that was probably one of the most bullish things he said. Besides this, the 7 times more agent interaction, 60% of AI platform usage was Athena in the first week of launch, and then 75% of new code creation was driven by Athena.
Dude, these are sweet pictures. Holy smokes.
It was driven by Spade, right? The 75% of code creation was driven by Spade, not Athena, right? I think.
Was it? I think he said.
Yeah, I think it was by
Did he
Spade.
say Spade?
Yeah, I think so. I don't know I forget, he didn't say what the acronym stood for, but that's like their internal.
Okay.
Because I don't think Athena's writing code. There's no, maybe, but Yeah, I mean, really good call. He also
Either way.
said we are a direct reason why other marketing agencies and related companies are struggling. Also, do you guys hear? I think 6-year performance stock options for management team.
Yeah, what was that about?
Yes,
I don't
Yeah,
know.
that was awesome. I was
Makes
trying
me
to talk
pumped.
about that earlier during the intermission.
Yeah, I
Yeah, I
don't
gotta
know
break
what
that
that was.
down.
Yeah, I don't know. Did they say stock options or they didn't really
Yeah,
give
he
much detail
said
about it? I'm
6-year
assuming
stock
it'll be-
option. If they take that, then there's no they're not getting any other like shares during that 6-year time. So it's actually really nice because they were
Love
saying
that,
they're
yeah.
bringing in experts in stock-based compensation. Didn't even know that was a thing, but I guess we got experts out there that help a company understand stock-based compensation. They basically said we're putting together these 6-year options for our I think it was engineers and upper echelon
Yeah, it sounded like that's what I
management,
heard too.
and then if they get the 6-year option, it's performance based, and then they don't get any other kind of, which I think is great, right? It's like, here's 6 years, prove it, do your thing.
Oh, I
but you're
love
not getting
when
any other shares besides
stock
that.
options are aligned towards actual
Yeah,
metrics that move the
100%,
company forward.
100%.
They also said
I mean, look at Elon
we
Musk.
expect to be active buyers of our stock at these levels too. The CFO said that on the call.
Wow. Yeah, that's wild.
I
Also,
didn't
they're
even
going to come
really.
out with an Athena certification. I will be getting that. I don't know if anyone else will be.
Yeah, I saw your post.
But
That was
I know
cool.
Nick will be nerding out and trying to get it too. I already know. He already knew about it, probably. He already has it.
Yeah.
You know what, guys? I was quite shocked the amount of jabs David was taking at competition.
loved it.
Oh my god, guys!
Look
Guys,
at my account.
yeah, like listen to this. Listen to this quote right here. So one of the first questions we got, it was essentially a TTD question, right? The trade desk question. It's like, how much will Zeta benefit from essentially the gap and the void that's been created by TTD until they figure out pricing? Does this rebound dynamic help them? What, essentially asking, is it too late for TTD, right? And then David went on to say, without saying any names, that was what he prefixed the entire thing with. He said, I think the horse is out of the barn. Organizations who built workflow management tools, who do not have proprietary data, who do not have native proprietary AI platforms, are really going to struggle. We are going to beat them handedly in the marketplace. And then he went later on to just go at Salesforce and AppLovin, I'm pretty sure. I'm like, oh, interesting. I don't know if it was AppLovin or if it was somebody else, because he specifically called out a predominantly mobile gaming platform. And AppLovin is like that number one name that comes to my mind, but I know there's a couple more.
Me.
It could be, I wonder if it's Braze or Braze, or is it Klaviyo? Braze.
Wait, what was that? Sorry. What'd you say?
Which part did you miss?
The last thing you just said when you were saying that you think it's Braze or whatever.
Yeah, so it's Braze or Klaviyo. So yeah, it's definitely Braze. Braze does mobile gaming ads. So I think it's Braze rather than AppLovin. I don't think he would just call out Adam's company like that. I think Braze is a bigger competitor that is kind of like toe to toe with Zeta
right.
rather than App.
Klaviyo is more for sales and marketing.
Yeah, but yeah, it was quite an interesting commentary, I must say. I'm happy with the little sparring back and forth. Something I did find was interesting. Where is it here? Ad agencies are beginning to sign large, long-term contracts. That is an exciting proof of point for us and our product. That was Chris Greiner. In this case of a global company, we displayed what I think many people would certainly be. Sorry, I'm just all my spelling mistakes as I'm fast typing. One of the largest serving marketing clouds. So essentially, he was talking about how they stole a customer from one of the largest marketing clouds out there, and I think that was Salesforce, is what he alluded to. And then they went on to say, on the topic of drawing in new large agencies this past quarter, David said, agencies don't really focus on retention. As of last quarter, retention was 60% of our business. We have real greenfield opportunities as it relates to customer acquisition, which is interesting, right? So David has never, ever before exposed their sort of revenue balance, the weighting of retention, growth, and acquisition through that revenue spread. Now he just gave us a number. Now we know roughly 60% of all revenue last quarter, or all business, I should say, last quarter, came from customer retention use case, not growth, not acquisition. So that's interesting. That's a new piece of information we never heard before. But with the convent of ad agencies and large ad agencies leaving other platforms and coming to Zeta, they see it as a real opportunity to expand the customer acquisition use case, which is very interesting. And I actually like to hear that, because that means they kind of compete more with the Trade Desk and some other companies. Trade Desk is more top of funnel marketing, right? Where Zeta is sort of mid funnel, bottom of the funnel.
Yeah, a lot of the talk I heard too was, to me, sounded a lot like the earlier Palantir days. I know I had to do this, but talking about longer RP processes, longer POCs, 10xing contracts versus a year ago. Similar mantra that I was hearing from Palantir in 2022 and especially 23 and 24 when they had AIP come out. And so I'll definitely be looking at Q3, Q4, and Q1 of next year revenue and seeing, assuming an acceleration because of Athena and their RP process and POCs they're doing. So it sounds a lot like the same mantra of Palantir. I don't think they're going to grow as fast. I don't think they're going to hit that 70 or 80% growth, but I do think they're going to accelerate to the 40s and maybe even 50s.
Yeah, I think it's possible.
And you also talked about the 700 to 1,000% return on investment capital for companies.
Yeah, the target.
I struggle with that because if you're spending 50K, yeah, they spend 350K. Who cares? Like, a 7 to 10x to me is cool, but I want it to be on an actual large number, not they started and spent 20K with us on a pilot.
But the 600%, but that's the average across all customers. So they're not just like cherry picking the numbers though.
Yeah.
That's the average. So if it's 700 to 1,000% average, that means it's including their super scale customers and their small customers. I mean, that's massive.
Yeah, no, it is massive. I don't know. I struggle with it. Like if they say that for the next 8 quarters, they're 7 to 10x, well, then how are you only growing 25% organically? If you're 7 to 10xing every single quarter but it's because this base is $1,000 to $8,000. Like, who cares to me? I just think I struggle with, when he throws around that all the time. But I think it's great, and not many market companies can even do that. But I think it's.
The biggest thing is just getting the wallet share up. That's like 100%. One of the biggest things.
Yeah.
So
100%.
But did you guys notice? Like, I think we've done this enough. Did you guys notice the analysts weren't really trying to do like a gotcha, like looking for like a gotcha question? They were more so like very intrigued and very like seeming bullish. Was I the only one that picked up on that, or was I?
No, you're right.
You guys noticed that?
Right. And there was new analysts too, right? Like we had
Truist. I haven't heard before. I don't think
KeyBank. We haven't seen KeyBank actually on the call. They've covered the stock, but they're on the call. Same with RBC. That Swanson guy, I brought him up earlier before earnings, before market close. Actually, I brought up how RBC released that internal report saying how they're bullish Martech, AdTech, specifically Zeta and AppLovin. And it's kind of interesting how he actually hopped on the call, that's very good to see an analyst actually write a piece, call out a specific company by name, and then actually hop on the call and talk about it for the first time.
The Black Swan remains the man in the colorful suits, though. If he ever gets on CNBC and starts,
he can't say much though, right? Because he's on the board of directors or whatever.
Oh, is it?
Yeah,
I didn't even know that.
It's either board of directors or a special appointee or something like this.
Did they have that same sort of dynamic with Palantir, maybe? Or
no? He wasn't on the board for Palantir.
Yeah, that's why I like that guy that was crapping on Zeta last week that he was an expert. It just like when me and Nick were talking about it, it was like, so you think that colorful guy in all his colors didn't look into a company with his type of reputation, and like, I don't know. I was talking to Nick about this. You can't just we were talking about this on Monday. You can't just throw around and basically say like a company's committing fraud and like just fudging numbers, especially when they come out with a 50% year over year. It's just silly. If you had
No, I just thought I agree with what you were saying earlier, Ronnie. Like it did seem that the analysts were a lot more enticed by Athena and were like just really curious on use cases, how they're getting adoption, what are the returns, the multiple like a bunch of different questions about Athena. And so I think we're going to see a lot more buzz around it. I'm hoping, David, team, if you're hearing this, please do Athena cons. For the love of God, have your customers sell it for you. It's not that hard. It really isn't. Like, I'm not even an executive in a company, and I can tell you that will win you business, that will win you growth. Like,
So
do AthenaCon, show the use case, sell itself, and easy growth organically.
Chris Greiner, like, because I talked to him about this during our interview, and I brought that up, and he said the toughest part about it is actually like getting the customers on board to come out and really start speaking highly of it, because they're in such a competitive mode, which Palantir's done a great job to like kind of like highlight. Maybe they're giving discounts or something, I don't know, but like Chris Greiner was basically saying, if you watch it in my interview, they want to do that, and they want to get more people like TKO, right, coming out and lauding Athena and stuff. And it's still so new, obviously.
Yeah.
But he said it's hard because they're so competitive and they like don't want to give their edge and stuff. But yeah, I mean, I agree.
Right?
Yeah, but with Palantir, they're doing this. They're doing the same thing.
I know.
And they're doing an entire operating system, not just a marketing platform. So that's even more competitive to me. You're literally giving your entire business landscape on a scale versus just a marketing team. Like, to me, that's a crappy excuse. And to me, I would like to see customers want to sell it if it really is that powerful. And like Palantir's doing, like, I'm sure they gave a Foundry and AIP away for free if they did a customer success story, and that gives you 10x more business. And you don't have to go fight for it yourself. And so I just think, I could be wrong, obviously. I'm just a retail guy, but I
would love for it too. I mean, 100%. I just remember him saying that, and I was like, yeah, I mean, I can kind of get that, but yeah, I guess the one difference is like AIP, they charge a bunch for it, and like Athena's free.
No, AIP was free to begin with.
Was it? Okay.
Yeah. Yeah, it was.
Did they say anything about the lawsuit? Somebody's asking in the chat.
Nope.
No, I don't think they can comment on that.
They're not going to comment on that, right?
Yeah, they don't want. Yeah, not during that call.
I don't even think the lawsuit has anything to do. Like, do people even care about that anymore? I don't think.
I don't think it sends the stock higher if it get, like we were talking about on Monday. I don't think it sends the stock higher if it gets dismissed, but I do think if it goes to trial, it would send the stock lower. So it's a single-edged sword.
Classic.
Yeah, of course. It's only a negative.
Only the negative sentiment works.
But I mean, like, honestly, if it goes to court and then like you just had earnings like you just did, and it goes down, like, I'm buying more. Like, I'm just gonna be like, okay, thanks for the discount.
I bet if it goes to court, though, it would affect their full year profitability. I bet they would miss.
I don't know.
By the time it got
they have
through
insurance
court,
for this stuff.
yeah, by the time I got through court, it'd probably be 2027. But
that's true. Yeah, that's true.
Yeah, man. It's New York.
Yeah, that's true.
That's why it's taking so long already.
Yeah, man. Seriously. Guys, so some of the new things that I learned in this call, I just like sometimes when I hear something I've never heard before, it just kind of, takes off my brain and I just write it down in red. Something that I thought was interesting. Chris Greiner mentioned he actually outlined every single channel Zeta owns, which wasn't clear before. We knew that they had display, email, and CTV, but we didn't know all of them. So as of today, we now know Zeta has owned channels such as email, display, video, mobile, CTV, and others. I don't know what others would be. This is likely like physical deployments, like on billboards or digital ad boards, perhaps like displays at gas stations or like pamphlets and whatnot mailed to your house, perhaps. But that's a little bit more robust color, right? That gives us a little bit more color on what they can actually do. That's the higher margin side of their business. But what they did tell us here as well is email, connected TV, mobile, social, all grew by double digits, all while each use case, acquire, growth, and retention all grew by double digits as well, which is really good to see. That means the entire business, every single channel is expanding rapidly, which is very, very good to see.
Wait, it's not just an email company?
Man, when people say that to me, I just laugh so hard. I'm like,
well, that's
what
one guy said.
I know. You know, guys, what I really want to find out.
Isn't MailChimp's competitor?
Yeah, I really want to find out who this customer they won. They won a massive retail brand with over 3,000 locations globally, and they stole that customer from another competitor, apparently, which is interesting.
That's I kind of want to know
who. Hear. I want to know who that was, and I want to know who it was. So I'm going to try to find out.
They're talking about TTD. Maybe it's Netflix because TTD worked with Netflix. So
no. Like Netflix, Netflix is sort of agnostic now because they have something called a conversion API, which it pretty much says anybody can display ads on our platform. Here's our conversion API. You just apply, we approve you, then you can push ads onto our platform and connect and everything. We just get a percentage of whatever profits you earn, right? So Netflix is more or less just like it's like as their supply side, right? So they just say, hey, we have space to sell. We push it to you. You deploy those ads. So
Oh yeah, that's right. They sell demand side. They're on the demand side then. Okay.
Yeah. So
something with TTD then likely if they're taking it because it's not App 11. App 11 sell side as well.
Nick, do you know by the way if like Disney and stuff like that also work like Netflix or?
Yeah. Well, see, Disney actually, they're an interesting case because from my understanding, Disney still works with TTD, right, on their platform. They're not like this sort of agnostic entity where they just have like a conversion API. I think the industry standard is kind of moving towards that. So then you could utilize these like massive data hives like Amazon and Shopify who have all this POS data. And then you can just use their data set to deploy an ad on your platform and just they do all the heavy lifting. You just take a little bit of the gravy, right? I think a lot of platforms are kind of going in that direction. But from my last time I checked, I believe Disney still has some sort of deal with TTD.
Actually,
yeah. I may be wrong about that. Somebody can check, but last time I checked.
By the way, just early predictions. I think they're going to do like 450 million in revenue next quarter.
You think so?
Just early predictions. Yeah, I think they're going to grow.
What percentage is that?
I don't know, man. I had them doing 60 million on Marigold and then I'm beating Core by 3.5% or something.
Oh, dude, that's crazy. So yeah, that's got to be like 43%.
I think it's 42 or 43, yeah, something like that.
Yeah, because 38.6% year-over-year growth was just having Marigold do the exact same growth it did this quarter, next quarter, without any core revenue beat. Yeah, so like crazy. the room to explode upwards and growth, just the runway.
I can't believe they still got a Marigold for flat revenue the next 2 quarters or 3 quarters.
No, man, that's crazy because it's unpredictable is what they said. Like they said in the earnings call, let me go find the quote, but something to do with churn.
So they must have put the absolute possible bottom of like if everything goes bad, this is what we hit.
Yeah, I do remember that. It was they said they expected churn on the low end customer, right? And then they didn't see as much churn, hence why the big beat on that front.
Yeah, I have the quote right here. Okay. They said on Marigold, there are SMB and mid-market players on the platform because there was some players still on the platform when they bought the enterprise. So they just had to kind of figure out how that works. We anticipated churn. We're not seeing as much as we thought, which is good. Hence the beat, which is interesting. Chris Greiner said that.
Did they give any commentary of like what they might see next quarter for churn, or they just gave commentary for this quarter?
No, they didn't really give any color.
Got it. Good enough.
Yeah, but I mean,
cool. So analysts continue to be wrong. December 2026.
That's good. That's
1.76 is the high, and they just upped everything across the board. Now they're guiding for 1.7.
Speaking of that, I think we're going to see a bunch of analyst price targets upgrades tomorrow.
Yep.
It's so isn't it so crazy though because they're already so high.
Yeah, they're all like
the average is like they're all in the like 22, 26, and like 29.
Do we know what the average is right now?
Like 26.
Yeah, I think it's 25, 26, somewhere in there.
Where are we at? Yeah, right here.
It just got quiet.
Like, yeah. 26. So
it's insane.
Man.
That'll probably be like we'll probably see some 30, 35s tomorrow and the next week.
It's just like when is Wall Street like people are like of course I do. People are so pessimistic, man. Like I get like this thing is like went up and down and all over the place, but like if you have conviction and you're just looking at the fundamentals, you're sitting there. You're sitting there and you're just watching the fundamentals get better and better and better. Them continue to raise guidance. See, my kid's pumped, dude. He's pumped.
Yeah, he's looking at the stock chart and going,
yeah, 6%. Yeah, so I mean, you just focus on the fundamentals.
I mean, when you put it on position, like and you know that you're going to hold it for a long time, just hold it. You know, I mean, if you're scared, then don't add to it. But there are probably a lot of people that sold at the bottom.
Is it the trade desk in the background screaming? What's going on?
No, that was a funny comment.
Who said that?
Funny comment. Oh my
Arsenic.
god.
Dude,
So
I used to
funny.
be a trade desk bull. I sold that thing at the worst time possible. Like I bought it in like the 60s and I saw it go all the way up to 130 and I didn't sell it. I didn't sell it when it went down to like sub 50s during the tariff tantrum. And like I finally sold it like at 75 or 80. It was just that I've never seen that happen to a company that I've ever owned. Like just sitting through its rise and then its downfall. It's just it sucks.
Now
Like
it's
that,
$23 a share. Insane.
yeah. And that's even after Jeff Green bought like 50 million shares. Like it just completely lost that pump.
Yeah, they just don't care.
But you know what? The telltale sign, because you saw it with Duolingo, you saw it with Hims, you saw it with Roblox, and I'm not like talking crap about these companies because I haven't done too much research on them. But sorry, Davis. I mean, Hims might come back, to be honest. But the thing is, like, when a company starts decelerating growth and contracting margins quarter after quarter, like there's something wrong. Right. Especially like when the whole sector is not as down, like there's something wrong there. And we've seen the complete opposite from Zeta. The ironic thing is like the price doesn't appreciate with it, but analysts are revising their targets higher. So, you know, I would just really attribute this to a software problem. I mean, this is how many times have they...
we're like, with a company like Zeta too, like it can literally double in a month. Not saying it will.
Yeah,
I'm just saying
it's
with the
very
market cap so
volatile.
small, when we see an IGV re-rate, like guys, Zeta's gonna move dramatically, very quickly.
For sure, dude. I mean, like, just look at IGV after hours. Like, if this move holds, like you will see a lot of these just catch up.
And
because the sentiment is just so bad.
That was a great point on Hims. No offense to Hims Bulls, but this is like a big reason I exited the company, because like a company like Row came along and started like out competing them on the App Store, but then also their margins are just like deteriorating. And then they had that quarter over quarter deceleration. So, but it's funny, like, yeah, again, like you were saying, like you look at a company like Zeta and their margins are just like continuing to climb and climb and climb. I mean, it's a thing of beauty, honestly.
Yeah.
All right, gents.
Yeah, I mean,
we close
go
to
ahead.
wrapping. Sorry, Sam. Go ahead.
No. Go ahead. If you got to go.
No, I was gonna say I'm probably gonna hop here in a sec. I don't know if you guys wanted to wrap up or.
I have
Bro
one
thinks he's
thing
the star
to
of the show.
add, guys.
I'm
One
not.
thing
I'll
to
leave.
add.
I'm not the star. Go ahead, Nick.
So I think I know who that customer is. That big marquee signing.
Oh,
I bet, of course you do.
Dollar
I'm
You just
General,
texted
Walgreens?
David.
Why did it take you so long? Why did it take you so long, Mr. Zeta?
Okay, so I believe it is Gap, the clothing brand Gap.
Oh, Gap.
Yeah. That
Really?
owns,
Big.
Yeah. I think it's Gap. They own like Banana Republic, Old Navy,
You know what's
et cetera.
funny?
Guess what? They were customers of Salesforce and Adobe, so they shared marketing cloud solutions with Salesforce and Adobe, and it looks like they are no longer a client of Adobe.
Damn, that sucks.
Oh,
Sucks for Aria.
It's like watching my two children fight, dude. It's brutal. It's not core to the business. What makes you say that? How do you know that?
No, well, like it's
David DeAndre.
the services
Nick.
that they had with
David,
Adobe. The services they had with Adobe, it would make no sense for them to sustain those services and go over to Zeta. And the commentary from Zeta also suggested that they won over this new marquee signing from a competitor, right? So which suggests that they left wherever they came from completely, right? Which is interesting. Who knows the actual specifics? I'm just kind of reading between the lines, but it says here that Gap utilize Adobe products, specifically relying on Adobe Analytics to measure marketing efficiency, to track conversions and build customer segments. So literally what Zeta does. Yeah.
All
right, gents. Well, I'm gonna hop. Appreciate you guys having me on.
We're wrapping
Super
it up.
fun.
All right, guys. This was
3
good.
hours on the dot, basically.
This was good. Let's pump tomorrow, yeah?
I hope so.
I think next week, man. I think next week because you got Friday and you got a bunch of people earn options.
Yeah, true. Lots of options.
Oh,
Expiring.
today was
Wall Street loves.
month end. Today was window dressing. So
Yep.
True. Let's get
So
it.
it
All right, guys.
looks. I mean, fundamentals are up. That's all that matters. Where price goes, where geopolitics go, guys. I mean, too many people focus on that. I mean, it's control what we can control. But awesome, great time, guys. Go Zeta. Great earnings. We'll see you guys in the next one.
This is great.
Take it easy.